All right, guys. We are here today. We are awake. All right. Today is CPI day. It's the biggest day of the month. Kind of the biggest day of the month. We got FOMC meeting and stuff like that, but all right, guys. Expectations are for 0% for CPI. 0%. We'll see if we hit it or not. CPI expected at 0% today. We also have the rate hike decision tomorrow. Y'all do me a favor, hit the like button when you join the stream. We appreciate it. And then, all right, so today we have CPI. Tomorrow we have PPI, FOMC. Expectations are for 0% today, 0%. We had Oracle earnings yesterday. It looks like they're gapping down from it. There you go, put that up. Yeah, we got CPI today. All right, we're here. Ugh. Bro, I am cold in here, dude. I am freaking cold, bro. My wife freezes this house out. All right. All right, let me get to a poll. We're gonna do a poll asking what do you guys think is gonna happen. Does CPI come in higher or lower than expected? All right, so does the CPI come in higher or lower than the 0% month-over-month expected? I should probably do one as expected as well, but it's all right. What's the best currency pair to trade? I'm not sure. Best is like subjective, man. Again, I could say, hey, what's better, chocolate cake or strawberry cake? And somebody could say chocolate, but does that mean it's really best? It's all up to you, bro. Like, it really depends on what kind of trader you are, man. All right. Good morning. New to trading, but how would a lower or higher CPI affect the market? Lower is going to typically cause a positive reaction. Higher is going to cause a worse reaction. I'm sorry. Hey, fake Michael Saylor. Yeah, I got some beats, bro. Hold on. Higher is worse. Higher means higher prices, higher inflation. Lower means lower prices, lower inflation. So typically lower is going to be seen as better. So the farther under zero that we come in at today, the better it's going to be. The higher above zero we come in, the worse it's going to be. What's up, Snow? What's up, Sam? Y'all do me a favor, slap that like button, team. We appreciate it. Yeah, hold on. I'm about to put on some music here. What's up, Daily? What's up, Dev? Yeah, I muted myself. My bad, team. Yeah, we're going to put some music on in a second. Hold on. All right, again, vote on that poll. 53%. Think we come in higher than expected. 47% think we come in lower. Oracle had earnings yesterday. Again, if we look at Oracle earnings, market's actually gapping up surprisingly though. So like Oracle's down a lot, but I'm down like $100 on Oracle. Hey, nice, Sam. P&L swings are what you do here. It's all good, bro. I'm not judging. All right, I'm about to put on some music here. Hold on. I'm checking out some other currencies right now, and gold. Gold dipped under 2,000 for the first time in a long time. So, I don't know what that means, but... Yeah, I mean, I got a couple too. All right, guys, today is CPI day. Hey, we still got a long time. I'm going to put a timer up. All right, this should work. There we go. Look at that math skills, bro. Math skills just on point today. Look at that timer. Gold will skyrocket after CPI data. It depends on what CPI data comes in at, of course. Again, if CPI data comes in low, maybe. If it comes in high, probably not. All right, so we're going to get some beats playing here real quick. Let me fix this. All right, guys, so today is CPI Inflation Day. I'll put this up on screen so we can see what we're expecting. Again, almost everybody's expecting 0%. for month-over-month CPI. Last period we came in at 0%. Will inflation continue to slow this next report? In a few hours. Data will be released live right here. Put this up on screen so you can see it. Again, you can also see Oracle missed earnings. I'm assuming they missed. They're gapping down a pretty significant amount. Here's Oracle. Yeah, so Oracle posted a EPS beat, sales miss. Again, I'm telling you, lately what we're seeing is that sales miss. $20 minus 19.75, it would be 0.25. So it'd be 25 cents if you're talking about money. 130, yeah. So what we're seeing a lot nowadays for EPS is, yeah, a lot of people didn't work as a cashier when they were teenagers, and it's really showing. But no, I guess nowadays you probably don't even need skills like that because the computer does it for you, you know. But yeah. So anyways, what I'm saying is like a lot of the big earnings reports this season reacted really negatively to revenue misses, right? So EPS could beat as much as they want, but if revenue missed, the stock was going down. And I think you can kind of see that with Oracle here on the right side. Hey bro, how are you? One question, how do you comment on forecasted inflation rate month over month is 0? What? What's up with Bitcoin? Bitcoin under 42K, it's dipping down a little bit. Gold over 2,000, it's been dipping down a little bit as well. Gold in internet gold. Yeah, but Sam, actually, that's a pretty good edge if that's actually what you're doing. So that's actually a pretty good edge, you know, like pattern-wise, Sam. Like if on your losing days you're losing 1,000 and on your winning days you're always making over 1,000, then you're gonna make money fast. You know what I mean? If that's, you know, I don't usually trust people on the internet, and it's nothing against you, Sam, but I'm skeptical of everything. But if that's really what you're doing, then that's actually a pretty good pattern. Still waiting for my hand to feel better. I guess my hand is feeling kind of better. Remember, I hurt my hand rear naked choking somebody. I guess if there was ever a place to hurt your hand, I hurt it like this. And this, I didn't realize how much the crunch of my forearm on my hand could injure my hand, right? So I hurt it like this, basically. I think my hand's okay, though. It might just be getting old. Well, gold's down a lot as well, Envy. He said, any idea why silver is taking such a beating? Gold is down also. So gold is dipping down. It was at like 2050. It's at 2000s right now, 2003 currently. So gold's fallen a lot as well, you know. Again, slap the like button on the stream. Let's try to get over 200 people here before 7 a.m. Any earnings this morning? It's a busy week, man. It is a busy week, but not for earnings. Earnings season is essentially dead in the water. Nothing this morning for earnings. This evening we've got nothing I've ever heard of. Champions Oncology maybe, but I don't think I've ever heard of them. Nothing tomorrow. We got Adobe Thursday, Mind Technology Thursday, OPTT. I remember that penny stock. Terrible company. Absolutely horrible. But hey, don't let it stop you from getting sold on a sketchy Sketchy penny stock, OPTT, currently at 31.5 cents. Man, I'm surprised this thing's still around, bro. This is one of those stocks. This is like a historical, penny stock that everybody told me it was going to be some shining example of success. And OPTT now at a post-split price of 30 cents. Man, this thing. I'm surprised this company's even still around. I wonder how much they bring in revenue. I gotta find out. They can't show a profit. Okay. In the fiscal year ending April 30th, OPTT had an annual revenue of $2.73 million with 55.32% growth. I mean, they're making money, right? They're doing better than most, I guess. CEO of this thing's probably living better than me. I mean, let's be real here for a second. What's your prediction for the day? I really don't know what we're gonna get. I hope we come in favorably for inflation. I hope we come in at. I hope inflation goes down. But that's a big ask, and I'm not sure. Buy or sell gold? No idea. No idea what you should do with gold. No idea. Chat, what do you guys think you should do with gold? CPI can put us back to 2021 highs. I mean, it could. Whether it will, could is a different story. I could win the lottery 5 days in a row. But could is different than probabilities in your favor. So we could. I don't think we're going to. Yeah, I hope month over month will be negative. I really do. All right. Yeah. $2,800 to go then funded. Hey, good luck, man. Yeah, I made a little bit on my funded account yesterday too. Yeah, yesterday we made 100 something on our funded account. Santa Rally. Hey, y'all hit that like button. What time is the CPI? There could be a timer on the top left of the screen. There might be. I'm not saying there is, but Nvidia. I was wondering if this would be negatively affected by Oracle since they're both tech related, but not as much. Santa Rally early this year, watching those like a hawk. Yeah. Again, we'll see if we get a Santa Rally. I hope we do. Again, expectations for CPI 0%. A lot of people think we're going to have negative CPI. Core CPI expected at 0.3%. Last time it came in at 0.2%. So core CPI, which excludes food and energy, is expected to bump up 0.1% in speed month to month. CPI year over year expected at 3.1%. It's actually expected to bump down 0.1% from 3.2% last reading to 3.1% this reading. Core CPI year over year expected at 4%, expected to stay the same. PPI next month expected to increase about 0.6% from minus 0.5% to 0.1% positive this month. Core PPI last time came in at 0.1. This one expected at 0.2. Anytime you hear core, it means excluding food and energy. We also have FOMC rate hike decision tomorrow evening, but today the big day is CPI. It drops at 8:30 Eastern Standard Time right here. So again, hit that sub button, hit the notification bell, slap that like button here, guys. We got 15 likes that I can see right now. 15. I mean, listen. Okay, we got 50. Oh, my bad, we got 50. Looking at the votes, 57% of people think we're going to come in higher than the 0% expected month over month. I don't know what the result is. I'll make a guess a little bit closer to it, but I really don't know. Yeah, I haven't even pulled up Quant Tower. Pulling up Quant Tower. Since you made a poll for us, we'd like to ask your insight. Yeah, I mean, again, it's confirmation bias. I hope we come in lower. I'm expecting a negative CPI reading. Just like somebody else said, at least that's what I want to happen, although I have no idea what's actually going to happen. I truly have no idea what's actually going to happen. I hope we come in low. Remember, the rollover period is starting here today, team. So the rollover period is starting today. So the rollover period is here. I believe the new one, the new symbol for futures. Here, let me see. Hold on. Need to put this at just like a 1 minute. So the NASDAQ looks a little bit light. The volume looks a little bit light. On the again, the new one is supposed to be NQH4 for the fourth. I mean, I guess you could probably use either one of these. There's the NQH4. Here's NQZ3. Here's the old one. Which one looks like has better volume to you? I think they both look about the same. I guess we could check to see which one has better volume, but they look about the same. Very flat day ahead of CPI's reading. Yeah, very flat day ahead of CPI report. More volume on the H. I speculate that they are kind of overextended, watching supply zones like a hawk. Will continue to check the trend, and buyers continue to drive it up. I wish it's negative. PayPal. I'm in PayPal. PayPal's pretty flat, but I'm in PayPal right now. So I've been in PayPal. We're up nicely on it. What's up, UV? Yesterday I mentioned that we would bear for the next 2 days before market open. I'm not guessing. I'm breaking down the data, macro fundamentals, and listening to the dovish comments. Well, I mean, it's still a guess. It might be a calculated guess. You know, is what we call that, a calculated guess. Again, it's all guesses. In the market, nobody freaking knows. We could speculate, and you might be right about speculations, but we're all guessing. If the only way we wouldn't be guessing is if the data was exact, and like, or if the outcome was exact, like it was inevitable, and that's just not true. Anything could happen, you know. And so we can speculate and guess. You might be right about the guesses, but Isn't it so unusual? It's so flat. No, not ahead of CPI. Ahead of CPI, usually we get flat. So the market's typically flat ahead of these reports. Why is the market flat ahead of these reports? Because traders just trade less. They trade less in anticipation of these big data releases. I'm pretty sure it's the micros as well. No, we roll over everything, correct? I'm pretty sure. Let me MNQH4. Yeah, we roll over everything this week. I'm pretty sure. We roll over all the E-minis. That is. Yeah, so we roll over all the E-minis. All right. No big earnings. Big economic reports all week. Watching the SPY here. I'm still trading this. Well, I mean, you can trade whatever you want to trade. Again, I'm watching Nvidia, Tesla, Apple. You know, Tesla's still over 240s. That's good. What's your opinion about CPI today? I hope it comes in low. But who knows what it's going to come in at. I really do hope it comes in low, but who freaking knows. You know. Watching Nvidia too. Market's been in such a flat range though, and we still got an hour and a half until this report. Yeah, so we're in our actual funded account right here. So this is our actual funded account. You can see we're up a little bit. We took one contract to the NASDAQ short. Got a little bit of a breakdown, up about 20 bucks. I just want to build up a cushion first. And you can kind of see we're going back and forth here. The spreads are pretty gnarly though. Because like you can kind of see we were deep in the green and now we're red. And now we're flat. I just want to see if we break down a little bit more. I got bearish signals on both 1 minute and 5 minute charts, so I'm just trying to ride this down some if I can. There we go. Slightly green. We'll take time though. It's a very small movement chart right now. Again, everything's kind of flat currently, so it'd probably be a better move to wait until CPI actually drops first before I take any big size positions. You can see right now we're completely neutral here, but we are day trading the NASDAQ a little bit early this morning. Oof. We're definitely gonna have to cut this. We're very close. $35 down. We're not down much. $30 down. I'm just trying to see if it rejects this top and then heads back down. I don't want to get faked out. Yeah, we're gonna go ahead and cut that. So we lost like $45 there. Yeah, 45 bucks. Maybe I should have taken profit when we got it. I'm probably trading a little bit too early. Yeah, I mean, the reason we're flat right now is because the market is in anticipation mode, right? The market's waiting for the data to come out. So, like, the market's boring. Not doing that much. Pretty neutral. You can see the market is, like, look at the Q. If you want to see how, like, and again, think about it like this, right? If you're a big-time hedge fund or bank or trader in general, right? And you're going to trade. Do you want to trade when there's nobody else trading, when the spreads are worse, the liquidity is worse, there's much more apprehension in terms of big potential movements and the up and down side from big reports like this? Or do you want to trade when there's high volatility, high liquidity, easier seen patterns, so forth and so on, right? You want to trade when it's easier to see the patterns. And so in that regard, right now, it's just very, very neutral, very, very choppy, very, very boring. There's not much going on. Everybody's kind of sitting on their hands waiting for these reports to drop. And that's kind of where we're at now, is everybody's sitting on their hands waiting for these reports to drop. That's why you can kind of see the NASDAQ here just kind of going like this. Everybody's just kind of sitting tight, waiting. And again, we'll see. I hope something comes out good today. What I'm seeing is a completely flat market right now. Very boring. Hey, thank you, Ramsey, my guy. Thanks so much. Market is super sideways. The sideways range is actually pretty obvious, but it could break this sideways range anytime it wants. Hey, thanks, man. Thanks, Ramsey. So we're going to get out small, $45 loss, and we'll probably just wait now. I don't want to take any big crazy positions. What's your predictions? Put your predictions out in chat here for this report, guys. What's a put spread? Get your predictions out in chat, team. Yeah, very choppy trend. The only trend I think we really have right now is a sideways neutral trend now. Let me check the chat. We got about 300 people here. 8:30 a.m. If we higher, we might tank. If lower, we explode to the top. Yeah, potentially. It's never that easy, though. Yeah, well, there's a very famous quote, and it goes something like, money is not made in trading, money is made in waiting, or something like that, right? Like, the quote goes something like that. You know, right? The quote goes something like that. And it's absolutely true. Like, in order to be a good trader, you have to wait. You have to patiently sit out, like when you should, and vice versa. Like, you have to wait. You know? Is my internet's messing up? Nobody knows what's going to do. The algorithms are faster than you. Mixtape coming soon. Yeah, honestly, the range is small right now, too, so you're not going to get much action, I don't think, right now. What the heck is going on? Oh, I know what's going on. Okay, let me close this. All right, guys, we got over 300 people here. Shout out to my guy Ramsey for the dono. Yeah, I mean, typically with the way I try to do it is like you'll catch me trade early. The trades I take earlier on will usually be longer term, like trend trades. So basically, if the volume is lower, I usually attack trends if I can. Right, so if the volume is low, I typically try to like attack trends if I can. If the volume is high, then I'm a little bit more willing to scalp and do stuff like that, depending on what we got going on in pre. Right, depending on what we have going on in pre-market is going to influence what I decide to do. Money talks and bullshit walks. Good quote. I mean, I like the quote. Basically, if we look on the internet, you know, the internet's filled with people who claim to do stuff. Like, and again, I'm skeptical of all of it. It's one of the reasons, like, I don't claim to be profitable or anything personally myself, because I just don't trust H3, H4. I just don't trust the internet. What do you mean when you say volume is low, you attack trends? What I mean is that, okay, if volume looks like this, right? Let's draw it. If volume looks like this, you know what I mean? Like, I'm probably going to be more likely to want to attack this trend instead of like scalp this move. Why? Because there's less volume. Like, with attacking longer term trends, fills don't matter as much. You know what I mean? Like, fills are insignificant. Liquidity is less significant. I'm not going to say it's insignificant, but it's less significant when you're trading longer term patterns. If you're trading short term scalps, this is going to be virtually impossible to really make money on if you're trading short term scalps. And so what I mean by that is, like, if you're going to trade, you need to be willing to wait for favorable, like, action. And what I mean is that if the volume is low, you probably don't want to scalp. Scalping's not the right move, in my opinion, if volume looks like this. Why? Because your fills are going to, like, with scalps, you basically have to take advantage of favorable fills. Like, you got to get filled well. You have to basically take advantage of that. With trend trading, like longer term trend trading, that is, fills are less important. I hope that makes sense. Yeah, the market's completely flat ahead of this report. It's just not doing anything right now. And so, yeah, we'll see what we get. I'm waiting for good action. But again, the market's super choppy. Yeah, you need liquidity to exit. Views on the NASDAQ 100. I mean, we're looking at, the Q is the NASDAQ 100. Low liquidity, low volume, boring, sideways, in anticipation of CPI. Yeah, I mean, again, the Q is the same thing as the NASDAQ. If you guys don't understand this yet, this is the same thing as this. You might not be able to tell that this is the same as this because the right side, the futures version of this, has so much more liquidity. But again, look at the price action here. Like, look. Big top up there, dip down, bounce. Big top up here, dip down, bounce. Maybe that's the wrong one. I think this is actually big top up there, dip down, bounce, dip, bounce, dip. Big bounce, dip, dip, bounce, bounce, pull back, bounce, pull back, bounce, dip, dip. That's the same thing. It's the same price action. It might not seem like that, but the Q is the NASDAQ. And so the good thing about futures is that you can actually day trade the Q in futures, no PDT rule. Like I can buy market, sell market, all that good stuff in futures. No PDT rule. Where's the yields at right now? If I look at the 10-year. Yeah, 10-year dipping down to 4.23% right now, 4.23%. What's up, Beach? Yeah, I mean, again, chat, we're sitting back waiting. We got about 400 people here already. Slap the like button. Do we have 100 likes yet? We should, right? We got 97. 97. Yeah, obviously what I'm meaning is like this, the same price action on the NASDAQ and the Q. It's the same thing, you know, so. Like the Q tracks the NASDAQ 100. Here's NVIDIA. Tesla falling down a little bit. Tesla at 240.20s. The Q is an ETF that tracks the NASDAQ 100 index. So it's basically the same thing as the NASDAQ 100. If you look at the NASDAQ here, here's the NASDAQ. Very flat, very boring, bouncy, sideways. Yeah, I mean, again, guys, if you Google what is the QQQ track, it says the QQQ is an ETF that tracks the NASDAQ 100 index. What is the Q track? QQQ is an ETF that tracks the NASDAQ 100 index. It's the same thing. It's the same price action. The price is different, but it's similar to like SPY versus S&P. You know, the only slight differences are from pre-market, where there might be some subtle differences, and the liquidity is typically better in the futures version. Up or down? No idea. I hope up, but nobody knows. Do you provide one-on-one call? No. I don't do any like private coaching, man. I'm not claiming to be good or anything like that. I don't want to be a day trading guru. I just kind of report economics and data for free and don't claim to be an expert or a guru or charge for content or anything like that. Everything we put out there is free. Crypto will probably get affected by CPI. How much, we don't know. But probably will get affected at least a little bit by it. All right, so here's the SPY. Let me get the timer out of the way. All right, so there's the SPY. It's at 462.30s. And slap that like button if you haven't already. So yeah, Bob. So listen, Bob, I'm going to explain the futures market to you, brother. So the futures market, again, I'm going to break down everything from it. The futures market was originally created because farmers would grow crops. And by the time it came to yield those crops, the prices of the crops had fluctuated so much that it wasn't really profitable. Like they weren't making the profits that they wanted. And it was just too unstable of business, right? Like farmers were growing, like say you grow corn, right? Say you grow corn, and prior to growing this corn, you calculate how much you're going to make, you know, in yields from this corn crop. But by the time you yield these crops, like the price of corn has just tanked. And basically what you thought would be a profitable endeavor wasn't, right? This was happening a lot. And so what farmers started doing was they started selling speculative contracts, locking in the price to investors, right? So if an investor wanted to gamble on corn prices, they could lock in and say, hey, I'll pay for your corn when you yield it for X amount, right? And if corn increased in value over that period of time, then maybe the speculative investors made money. If it decreased, then they lost money. But the good thing for the farmers is that they would know what they were going to make no matter what, right? They would lock in the prices no matter what. And they called these contracts futures contracts, right? Over time, those contracts evolved to where you can trade the S&P 500 in futures. You can trade the NASDAQ. You can basically trade the Q. The NASDAQ is what the Q tracks, that NASDAQ 100. You can trade the NASDAQ 100 futures contract. Same price action, same volatility. There's just no PDT rule. So you could day trade short, you could buy market, buy bid, sell the ask, just like stocks, but there's no PDT rule. And you can see the NASDAQ right here. Again, it's the same price action as the Q. It's the same thing. Like this in futures is the same as this in top. Same, not the same price, but the price action is the same, right? But on this bottom side in futures, there's no PDT rule. I can buy market, buy bid, sell the ask, just like stocks, but there's no PDT rule, right? That's one of the easiest ways to get around the PDT rule. I can day trade, short it, do whatever I want in futures, and there's no PDT rule, right? That's the futures market. That's what it's evolved from, and that's where it started, was from farming, basically. It used to be pure commodities, but eventually it grew to and evolved to where it is now, where you can trade all this different stuff. You can trade gold, silver, cattle prices, S&P, NASDAQ. You can trade the Dow. You can trade the Russell. And that's the benefit of futures. A lot of people don't realize that. Like, a lot of people, when they want to day trade, they try to day trade a cash account, which is going to be severely restrictive, or they try to day trade, a margin account by putting up 25,000 and all this crazy stuff, where you don't need to do that at all. You could just try the futures market. There's no PDT in futures. You could day trade, all that good stuff. Again, if you want to try out a funded account program, which gives you a demo, test your skill. If you could pass the test, they fund you. I'm sponsored by one. It's called Top Step. I'm super biased in their favor because they pay me money. I'm always transparent about that. But again, it's a great way to learn how to trade with less risk. The base one's like $49. If you lose, you're out $49. It's not the end of the world. It's much cheaper than putting up thousands yourself and losing that, which is what most traders end up doing. So again, if you want to check it out, there's the link. I mean, confirmation bias says I'm bullish. I want the market to go up, but I don't know what the market's going to do. I hope it goes up. Can you name some futures market tickers? Currently, the rollover just happened on the NASDAQ, so we are currently at NQH4 is what we're currently at, NQH4. So yeah, we're currently at NQH4. Previous one was NQZ3, I believe is what the previous one was. We got gold, which is GC. I believe it's GCH4 is going to be the new gold one, although I'm not really sure what the gold. I don't trade gold that much. GCH4. It's either GCH4 or GC. There's a bunch of gold ones. Yeah, so here's gold, GC. So again, if we put up gold here, here's the NASDAQ. Here's the S&P 500. So the SPY. The SPY price action is the same thing, ESH4. Rollover just happened too. So every quarter these roll over, you got to switch contracts to the most liquid one. But yeah, this is the S&P right here. Basically the SPY. And again, if you look at the price action on the SPY, look, small little bounce, big pullback, big pullback. If I zoom in here, it'll look a little bit more likely. You'll notice the liquidity is actually better in futures too. Yeah, yo, sorry, bro. Again, if you're gonna plug something of yourself, man, number one, it'd be one thing if I actually like saw you here every day, but if you just randomly show up in my chat room trying to plug yourself, you're just gonna burn bridges with all the big streamers, and they're just gonna ban you pretty quick. Lean hog futures. I asked about a call because your fundamental view is best. Screw courses and pay things. Yeah, man. Again, I'll tell you guys this. A lot of the biggest edge you'll ever have in markets is on the upside in investing. Like investing on the upside. See, look at the Q bounce, right? And then let's look at the futures contract. You're going to see a very similar thing. Look, here's the Q bouncing. Or no, this is the S&P 500. If we put up, you can see the same type of bounce. You can see bounce, pullback, bounce. You can see bounce, pullback, bounce. Same price action. Yeah, you can always talk jiu-jitsu or stocks. No, I mean, I honestly, or futures. Yeah, it's just a pet peeve of mine, bro. Again, and if it really is something like if y'all were me, y'all would understand it. You know what I mean? Like, I get so many people that just want to be friends. They just want to be friends with me, bro. Like, they just want to be my friend. They also want to, plug their own business. And then when I don't let them, they turn into the most toxic person I could ever imagine. But they just want to be friends, bro. They don't understand. They don't understand why I won't plug their stuff for free. It happens. I didn't even ban him. I just put him in timeout because he just immediately joined here trying to plug himself. And again, guys, like I said, I'm not saying I'll never plug you. And I'm hesitant to even say this because if I say this, then you're going to have a bunch of people thinking, hey, if I'm nice to John for a couple months, then he'll give me free promotion. And that probably is not going to happen either. The way you grow on YouTube or in business is not by like shilling yourself on other people's live streams. How do you own disorder? Yeah, I've seen it time after time. 100%, bro. Like, I get people that are super nice to me. They're like, oh, John's the greatest. I love John. I love John's channel. Hey, guys, did y'all see me? I started this new YouTube channel. Y'all go subscribe to it. And then when I'm like, hey, don't do that. Like, stop it. Like, you can't plug yourself here without asking. Then they just disappear, right? So they're just being nice, hoping that they can plug themselves one day, which is fine, I guess, as long as they're respectful about it. But again, nobody's a bigger hater than a failed YouTuber, right? Like 100%. Like if you've ever seen somebody that's tried to do what I'm doing and failed, they are the biggest haters on my channel, 100%. Like they are the most critical, the biggest haters they could ever be. It's either that or somebody that's wanted to work with my channel historically. Like if they wanted to like be a mod or they wanted to like be a person and then I don't let them. Oh, dude. Scorned lover type of anger comes from that. I learned your name. Can we be on a first name basis, Brian? I mean, maybe. Can we? What's your prediction for CPI? I really don't know what we're going to get. I'm just kind of trolling in here, guys. It gives me something to talk about. Maybe it's therapeutic. Maybe this is John's therapy right here. You guys won't tell anybody, right? We just got 500 people here. It doesn't matter. NASDAQ rip it up right now, guys. Let me see if there's a reason for this. Yeah, you better call me Sir Brian. Sir John. My last name's London, so it fits. Sir John. I've been watching. Is it Poldark? Poldark? What is the name of this guy? The English show. He's got the red-headed. He married his house wench. Is it Poldark? Let me see. Now I gotta look it up. Poldark. I've been watching Poldark with the wife. My wife is really about like that medieval English, time period. Poldark. Yeah, we would watch a Poldark. Yeah, I hope the market goes up. I really do. I don't see any news that's causing this move. Maybe the Reuters poll. So a Reuters poll showing 10-year U.S. Treasury yield seen at 4.1 in 6 months, 4.1%, 3.8% a year. Basically, they think and that basically means that the equities market could push up. China warns of pressure of power supply on a cold wave. Do you speak Spanish? Not a lot. Not a lot. I can speak a little bit. All right, guys, we got an hour left, an hour before CPI. You guys ready today? Will Powell raise rates? He's not raising rates, team. Not unless, even if inflation data comes in super high today, he's not raising rates, in my opinion. If we can look at the probabilities of a rate hike here and see that it's literally 1.6% of people think we're going to raise rates. 98.4% of people think we're going to pause or continue to pause. Again, it's just unlikely. The labor market actually got a little bit... we've seen some resiliency in the labor market, but I don't think it's anywhere close to enough to cause the Fed to raise rates again. You got to understand, team. The Fed's rate hikes, they have a lagging effect. They're not just going to immediately combat inflation, right? So, the Fed raises rates. About a year later, we start to see the effect on the economy and inflation. And so we've raised rates really aggressively over the last year and a half. We're not going to just blindly continue raising rates regardless, especially with inflation showing the damage that it has. Inflation has slowed a lot over the last year. And this time they actually have a potential for it to go down month to month. Last time it was neutral month to month. This time there's actually potential for it to drop month to month, and we'll see. But again, in the end, you have to understand the Fed's not just going to continue blindly raising rates, because there is going to be the check's going to come eventually if they start to do that. You have to understand, these things do affect banking. The way these work is, the Fed raises rates. That impacts banking, right? It makes banking more expensive. Banks raise interest rates to consumers to compensate for it. And then eventually consumers stop spending as much. And so businesses lower prices to compensate for it. And then it combats inflation. That's how it does. But the point is that these rate hikes affect banks. And if we keep raising rates, the banks are going to struggle. We already saw the banks struggle earlier this year in March with the banking crisis happening. And speaking of banks have had a big bounce back. JP Morgan's almost at the yearly highs, getting close to the lifetime highs. And so if we continue to raise rates really aggressively, it's going to hurt banks. Now, again, if we continue to see strengths in the labor market, the Fed said the hurdle to hitting the 2% inflation goal over time is the labor market, right? It's one of the reasons the market and the Fed does not want a strong labor market. Jobless claims, they want jobless claims to come in higher than expected, unemployment to come in higher than expected, payroll numbers to come in lower than expected to a certain extent. Again, why? Because the labor market has been the biggest hurdle, according to the Fed at least, to us hitting that 2% inflation goal over time. You got to think more people working means more people spending. And so, when the Fed raises rates, what their intention is behind it is to dampen the labor market to a certain extent. And so that's another nuance of the market that you want to understand moving forward with last week's job report and jobless claims day after tomorrow and all that stuff. But again, I think the Fed is very balanced. I think it's most likely that we're going to pause. And I think usually we go with what's expected. And a lot of the time we get contrarians out here picking super unexpected things. But right now, we're essentially at 98% of people thinking that we're going to pause. And I agree with that. We almost always do what's expected here. Very rarely does the Fed shock the markets, because they understand if everybody thinks we're going to pause and we raise rates, it's probably going to tank the market, right? And especially during the winter months like this, I just don't know if the Fed's going to do that. CPI data is not out yet. It comes out in an hour. quantitative easing next year? Maybe we start printing money. I don't think we're going to cut either. NASDAQ is not moving with the Q. Check yesterday. Yeah, I mean, again, it's not arguable, brother. It's not arguable, man. They might have small nuance of differences, mostly because, one has better liquidity than the other, right? But again, it's not really arguable, bro. If you type in Google, what does the QQQ track? It's going to track the NASDAQ 100. You have to look at the same time frame, though. So, again, if we zoom out here, easiest way to put it is on a daily chart. All right, here's a daily chart on the NASDAQ, and here's a daily chart on the Q. All right, if you don't think they track each other, very easy to prove this. The price is different, of course, but the price action is the same. Down to where we bounce. Look, here's the 200 EMA, here's the 200 EMA. These are two different symbols, two different prices, but they move exactly the same. It's because the NASDAQ 100, the QQQ tracks the NASDAQ 100. My dad speaks fluent Spanish, and he does. Yeah, but I don't. I know a little bit, Yeah, new contract yesterday. Yeah, it's the rollover period, so. Yeah, I mean, I'm not going to keep arguing with you, to be honest. Yeah, number one, they were both positive, man. To be honest, I think you sound pretty new, and so you sound pretty new, brother. Again, it's not really arguable. Yesterday, both the Q and the NASDAQ were green, not red, bro. And again, there's going to be small nuance of differences, mostly because gap ups happen and different things. Like if we look at the Q as an example, let's see. The Q is going to have small nuance of differences here, but they basically move the same. Yesterday was green on the Q. Yesterday was green on the NASDAQ as well. The only difference is that if you look at a daily chart, the NASDAQ is showing today's candle where the Q is not showing today's candle yet. And so what I mean is that here's yesterday's day on the NASDAQ. Here is yesterday's day on the Q. Right? So it's the same candle. It's the same big green candle. We're just, for whatever reason, not showing today's green candle on the Q. But again, you're arguing over something that is 100% certain. So, I mean, you can keep arguing it, but, very good year, though, all the way around on the Q. Let's look at the NVIDIA. Again, Oracle dropped earnings yesterday. NVIDIA still bouncing up, still sitting right around 460s and 470s. It's been this way for a while. Fed will cut rates by 2% out of nowhere. Unlikely. Maybe. Again, I don't believe in definitive statements with regards to predictions, but maybe it could happen. You think it's time for a pullback? What kind of pullback? I don't know. I really don't know. I think the markets are up a lot. But I tend to be a long-term bullish trader. You got to understand, I say this every day, but team, the markets are going to go up over time. Like if you're, again, I always tell people the same thing, right? If you find yourself shorting the market, the broad markets like the NASDAQ, the S&P, the Dow, if you find yourself shorting those markets long-term, like what I mean long-term is for like years plus, you are in one of the biggest sucker bets you could ever get involved with. You know, I'm not saying we don't crash. I'm not saying we don't have corrections. I'm not saying we don't have bearish years. But the more you zoom out, the more it's going to be bullish, and the S&P and the NASDAQ are going to go up over time with only a very small likelihood of it not. like less than 1% chance. And so typically the way I like to trade is I'll day trade and I'll short a lot of stuff short term. But if we zoom out long term in blue chips, I'm typically not shorting anything like that. The stocks that I like shorting the most are mid cap stocks that are extended over hype, like overhyped stocks. So like a lot of mid caps are just treated like they're Microsoft and they're not. And they'll drop 50, 60, 70% a year because the public overvalues them. And see, like Beyond Meat is a good example. Peloton is a good example. You know, there's a lot of companies where you see this happen over time. But I mean, if you're shorting Apple or Amazon or, you know, Walmart or, you know, whatever, usually it's a pretty risky bet. Not always, though, of course. And we do have crashes, right? We do have periods of crashes, but yeah, I think a lot of people, again, I say this pretty regularly. You know, this is something I say every day almost. I've been saying this every day for like a year straight now. And again, what I mean by that is that, like, I get it, people want to look cool. I get it, people want to be Michael Burry. I really do. I understand people want to be Michael Burry. I understand people are influenced by, like, politics and you know, movies and confirmation bias because they're short or whatever it is, right? But the reality of it is the markets are going to go up over time. And so, again, the easiest way I always put this is that if I buy the S&P 500, you know, and I'm wrong short term, I can hold the S&P 500 indefinitely, I should say. I can hold that indefinitely, and eventually I'm going to be profitable in that S&P 500 trade. If I short the S&P 500, the opposite's true, right? If I'm wrong short term, shorting the S&P 500, and I try to bag hold that over time, as time goes on, I'm going to lose more and more and more and more. And so what does that mean? That means long-term downside bets, you have to be incredibly rigid with them. So if you're shorting anything longer term, you better recognize when you're wrong and get out of that position, because if you don't, the longer that goes on, the more you're going to lose that position. And so just be smart. With that said, I try to take where the biggest edge is, and the biggest edge is typically on the upside long term. Right, confirmation bias because they're shorting, correct. The Wealth Destroyer guy made 100. I like Michael Burry. Honestly, he got me into trading. He really did. Like, he's the dude that got me into trading. He really is. Like, Michael Burry's the guy that I started being interested in trading from. Michael Burry. I went and saw the movie The Big Short. And I was always a poker player, checkers player. I love strategy games. I went and saw the movie The Big Short and got me into the stock market, you know. But Burry has called about 50 of the last 2 market crashes, you know. And so he simply overpredicts crashes and drags a lot of retail with him. Right, exactly. Market's going to bail you out over time if you're wrong short term. You know, point is, and honestly, I mend my swing trading strategy to this exact thing, right? This exact nuance of the market. This is how I swing trade. If you want to know how I swing trade, what I do, it's very simple and it works a lot of the time. You just got to be patient. And I can't guarantee it's going to work for you. I'm not an investment professional. I'm not liable if you lose. Yeah, I mean, Z, you can give us your big long-term bearish predictions on the US and the S&P 500, Z. Again, that's fine, bro. Listen, what I'll tell you is this, all right? If you're correct, and that is the end of the US, right? Moving forward, then we got a lot bigger problems than my wrong bets on the S&P 500, brother. Like, this is something I always hear in bonds, right? Like, I'll say, hey, if you're sitting on cash, just buy bonds, bro. Like, if you're sitting on cash for 10 years, you can make 50% gains on that cash by just buying bonds. It's guaranteed by the U.S. government, right? Bonds are guaranteed by the U.S. government. The thing I always hear, well, what happens if the U.S. fails? Bro, if the U.S. fails, we got a lot bigger problems than my bond positions, all right? Like, if the U.S. fails, like, bro, you're not going to care about your bond trades, bro. You're going to have much bigger problems at hand if we got problems like that here. And so that's the thing you have to understand, man. But yeah. So yeah, I mean, again, you can make your big bearish predictions long term. You got to understand it. And again, what you're betting on is you're betting on something that hasn't happened in over a century. And again, you can bet on that. That's all good, brother. Listen, the beautiful part about markets is you can bet on whatever you want. And so all good. Maybe you're right. I don't know. Maybe you're right. Look at this. Look at the Q rip up ahead of this inflation report as well. Here's the SPY. SPY testing highs. Liquidity still low. Q's got a little bit better liquidity, which means tech. All right, guys, we got about 700 people here. Hey, hit that like button, hit the subscribe button. I appreciate it. Silver, a lot of people asking me to look at silver. I see gold. Gold's down to 2,000 right now. So gold has had a pretty neutral couple weeks now. It ripped all the way up to 2150, came all the way back down to 2,000. It's basically right back where it was. So gold is essentially flat since October. I'm not sure what it's going to do. It depends on what inflation does here. Same thing with silver. But yeah, I'll tell you this, and again, I'm okay with being short, but I think everybody wants to be Michael Burry and call the next big short crash. I think YouTubers also play a factor in this as well, because, you know, I see a lot of people, bro. I see so many people, and I see this very, very regularly, man. I see a lot of big-time YouTubers, right, make these big short predictions. They're like, the market's going to crash. Watch this video, right? But they're just trying to get clicks. They're just trying to get clicks, right? They've called a short crash. Again, if you really look at their videos that they didn't delete, if you look at how many times they've called for a market crash over the last year straight, it's over and over and over again. You know, and again, market's gone up, what, 15, 20% now this year? So, I mean, you know, you got to understand what YouTubers, what their confirmation bias is. They get clicks if they can predict these things correctly, and so that's what they want. The likes aren't keeping up with the guests in the room. I have to shut it down. AVGO upgrade. Let me see. I don't know much about AVGO. I really don't. I've heard a lot about it. I know it's a super expensive stock, over $1,000 a share. Broadcom. I just don't know enough about the company itself. Anyways, though, what I realized that I forgot to tell you guys about my swing trading strategy. So my swing trading strategy is based around this idea that blue chip stocks are going to go up over time. The NASDAQ, the S&P are going to go up over time. This is my swing trading strategy, and you could probably use it with the NASDAQ, the S&P. You could probably use it with other blue chip healthy companies like Apple, Amazon, you know, stuff like that. What I try to do is I wait for big pullbacks, and it's really important that you're selective with this type of stuff, because you have to be selective, right? So what I try to do is I wait for big extended dips in these big healthy companies like Apple, Amazon, you know, Google, whatever it is. And so I'll wait for these big extended pullbacks, and then I buy those dips, right? So a good example of this is one time Amazon reported earnings, and this was like a few years ago, but this is the example I always use. Amazon reported earnings a few years ago, and what happened was that they dropped their earnings, and it was pretty much a neutral report. They had like BDPS, missed revenue, neutral guidance, and they dropped like 20%. They dropped like 20% from this earnings report, you know, so I ended up buying that dip. And again, the way I take these trades is like, I'll buy the dip, and if it bounces back in my favor short term, I'll take most of the profit off, and maybe I'll hold a little bit long term. But I'll buy a dip, sit on a little bit of it for a couple weeks, see if it bounces back. If it does, I very quickly take profit, maybe sit on, you know, 25% of the position and let that work long term. If it doesn't go in my favor short term, then I'll just sit on it. I don't mind holding Amazon for 5 years if I need to. And so what typically happens is that I make money short term if I'm correct, and I make money long term if I'm wrong. You know, and that's the best way to diversify entries, in my opinion, into these healthy long-term companies. Now, it has to be healthy blue chips. It can't be mid caps. Again, the biggest mistake people make is that they try to do this with mid caps. They try to treat Peloton like it's Amazon, and it's not. They try to cheat. You know, what's another example? Give me some examples of some mid cap guys that are sketchy. BYND, Beyond Meat. You know, not the same thing. There's a lot of companies like this where people overestimate their strength and they're not really established companies. So I need like long-term established companies: Apple, Amazon, Walmart, Target. I did this a lot with Target. You know, people hated me for it too when I did it with Target. I told people I bought Target. It was like the freaking end of the world. But Target was all the way down at $100 a freaking share 3 months ago. It's at $140 now. You know, I already took profit a long time ago. But again, this is a great example. And so I look for stocks that are healthy companies that people are overestimating their weakness. Maybe they have political bias, maybe whatever it is. Like, bro, if you go to Target, there's so many people there. There's so many people there. Like, it's not like Target's really struggling, even if people want them to struggle. And so I bought the dip around $100, rode the bounce, made money on it. Yeah, Neo is an example of one of the ones I'm not holding like that. It's just not a sure thing. Lucid's another. I see a lot of up-and-coming EV brands. Uber, I don't know. Uber's probably going to be okay long term, but I wouldn't call it a super large cap either, though. I don't know what the cap is. I'll have to check. All right, guys, we still got 40 minutes. 40 minutes. Good morning. How does CPI numbers generally affect the markets? I mean, they're going to affect the markets. It just depends on what the number shows up as. The expectation for today is 0%, right? So it's 0% expected, meaning inflation month to month is not rising at all, which is good, right? Typically, you have to understand, to go back to the previous talk we always have, which is that the markets are going to go up over time. One of the main reasons that happens is because your dollars are devalued over time because of inflation, right? Basically, inflation is going to go up over time, and so companies are going to need to make more money to stay at the same thing. Basically, to stay the same, they're going to have to make more and more money over time. That's going to cause their earnings to go up higher and higher over time, and in turn the price of the stock to rise over time as well, right? So because of that, if you're sitting on cash long term, you're losing money. And so that's the biggest thing to understand, is that inflation is going to go up over time, right? And so it's very difficult to get inflation to really go down over time, but what you can get it to do is slow. You can get it to slow. You can get it to stop increasing so much, right? And over the last couple of years, it's gone up a lot. Although over the last year or so, it has gotten a little bit more steady, or a little bit more stable. Not steady, stable. And again, this month specifically for CPI, they are expecting it not to go up at all. They're expecting it at 0%. They're even potentially could have a cut in inflation. And again, there's two sides of the inflationary coin. You have CPI today, the consumer price index is basically how much prices are going up or down for consumers. We also have the PPI report, the producer price index, which is how much prices are rising for producers. Both of those drop once a month. Today is the first one. It drops at 8:30 Eastern Standard Time. You can see the timer in the top left. And yeah, we'll see if we get anything good. With all that said, if CPI goes down this month, if CPI drops, if it's a negative number, that's probably going to be seen as very positive for markets, and the markets are going to be really optimistic and go up. If CPI is higher than expected, meaning if the number is a higher than expected number, that's typically going to be bad and mean markets are going to drop, although it's never a certainty and anything could happen. We could have lower CPI, the market could drop 5%. Like, you don't know what's going to happen. It's all just a guess, a speculation. I'll probably trade, but it's going to be a little bit more like I'm going to react to the news instead of trying to get into some big prediction now. We got about 800 people here. Yeah, I mean, again, a lot of people, 8:30 Eastern Standard Time, Jay, is when the stuff drops. A lot of people try to make these big, bold predictions and stuff like that, based off of, a lot of people try to make these big, bold predictions based off of, these reports, they do the same thing with earnings. And again, I'm here to tell you that's usually like a sucker's trade. It's a gamble, right? The only people you see really taking huge size trades on like ahead of these reports, like somebody taking a huge position right now based off of what they think is going to happen for CPI, I'm here to tell you that is a complete gamble. Nobody knows what's going to happen here. You can try to bet on it, but nobody knows. And so the only people that are really doing that are gambling addicts that, you know, if they weren't here doing this, they'd be putting it all on red and roulette at the casino. And again, they might pander to other gamblers that like doing that and like to feel the rush of trading, but it's not profitable trading. It's pure gambling. Now, you could try to react to this and maybe get in some edge there, but in the end, most profitable traders are going to take it very light, take it very slow. It's one of the reasons you see such low liquidity ahead of these reports a lot of the time, and this whole week is filled with these type of reports. So just trade smart, trade small right now, guys, if you're going to trade. Don't try to gamble on the outcome. Nobody freaking knows what's going to happen. And more so than that, nobody knows how the market's going to react, even if we do come in lower than expected for CPI, even if we do come in higher than expected. Nobody knows what the reaction's going to look like. And so gambling on it, you see this a lot with earnings, where a company will report better than expected EPS, better than expected revenue, better than expected guidance, and they drop 5%, right? And everybody's like, oh, the market's rigged. The market's rigged. It's like, no. These moves are already baked in. There's so much nuance that people don't understand about markets that a lot of new traders think they can just sit around and wait for good CPI and then buy, or wait for bad CPI and then short, or wait for good earnings and buy it, and wait for bad earnings and short it. And it's just not that binary. It's not that easy. You know, I wish it was. If it was, everybody would be rich. We just sit around, wait for good earnings and click buy, wait for bad CPI and click sell. But the market doesn't make it that easy on us, unfortunately. And so I wish it did, but it doesn't. Last month I spent a lot of money on holiday gifts, bro. All I'm saying is my kids are super spoiled, bro. Bro, my kids get more in one Christmas than I got my entire Christmas. My entire Christmas. And my parents got me some cool Christmas stuff when I was a kid. But my kids are just freaking spoiled. You know? Like freaking cell phones at 10. I get mad just thinking about it. And to a certain extent, it might not even be good. Like, people always say, hey, I want to give my kids the life I didn't have. And I understand that, right? But at a certain point, I think it's actually a bad thing, you know? Like, I think if you get your kids too much, they end up not respecting money or appreciating money, you know? Like, a lot of the people that I see that grew up and they just had everything handed to them, they didn't have to work for any of it. They don't respect money at all. They have no entrepreneurial spirit, I guess is the easiest way to put it, because money is not valuable to them. Or it's like, I grew up, my dad was cheap, you know, my dad, I got Walmart shoes. I didn't get new shoes every year. If I did, they were super cheap. We got off-brand cereal. And again, I can respect my dad more for doing it. Like, I'm not, like, I grew up well. Like, I didn't grow up, like, in the slums or anything. Like, I grew up well. But my dad was careful with what he spent his money on, right? And so I think I have to be careful as a parent not to make my kids respect money. They got to earn it. I should make them earn it a little bit more, I think. Hit the like button. Hey, I appreciate it, guys. Yeah, we got about 1,000 people here now, so we still got 35 minutes. Again, expectations is 0% for CPI, 0%. Yeah, AMD, an interesting one. Yeah, I got my first coffee still. Honestly, I finally feel better today, man. I was worried I had the norovirus, man. I was like puking and throwing up for days. Sleeping a lot. Had the cold chills and just stomach issues for like a couple days. finally feel better today, and yesterday I felt okay. Yeah, I mean, 0 is as expected. I mean, 0 is good month to month. Last month they showed up at 0, so 0 is good month to month. The lower is better though. So if we come in negative at all, that's typically pretty good. So if we come in negative at all, that's typically pretty good, but we'll see. Gold prediction. I have no idea what gold's going to do. What do you guys think? Hey, let's give your quick predictions here. What do you guys think the numbers are going to show up as today, guys? What's your number today, team? Zero? Zero's as expected. 2.9%, 3.2%. Month to month is what I'm asking. So month to month expectations are 0%, right? So 0% expected month to month. Last time we came in at 0%. Year over year, it's expected at 3.1. Is what's expected, 3.1%. Last time it came in at 3.2%, right? So we're expected to decrease 0.1% year over year to 3.1%. Give me your yearly predictions, I guess. Glad you're learning how to fight. These days it might save your life. I mean, I don't know if I'm learning how to fight. Jiu-jitsu is really fun though. Definitely like addiction of mine now is jiu-jitsu. It's really fun. I think a lot of people don't understand it, but it's really fun. .9%, 2.9%. I hope we hit 2.9. That'd be great. .3% year over year. Yeah, expectations are 3.1%, right? Last time we were 3.2, so if we come in at 3.1, we're dropping 0.1% year over year. All right, guys. There's 8 o'clock. It's 8 o'clock. We got 30 minutes here, team. 30 minutes. NASDAQ still ripping up. Q still popping. Again, slap that like button. Hit the subscribe button. Let's look at our poll numbers. We got over 1,000 votes. 56% think higher. Let me do a poll. I forgot a Twitter poll. So we're going to do our poll. All right, so higher, lower. Put as expected as our options. Put 50 minutes up as the time. Alright, so we got that poll live. When are you gonna make a jiu-jitsu YouTube channel? Bro, I'm still a white belt. Dude, I got 1 stripe right now. Like, bro, might as well ask me when I'm going to start doing private lessons. You know, start offering private lessons. Like, I'm still a newbie, bro. I'm still brand new. I suck right now. I don't have enough content to make. I feel like market's going to keep going up. Is it good trade Nvidia right now? I have no idea. Is it good to trade Nvidia right now? Define good. People always ask me these really vague questions. Like, is the market good right now? Is the market bad right now? Is trading Tesla good? Like, bro, I could ask you whether you think chocolate cake is good. And half the people are going to say yes. I mean, more than half of the people are going to say yes. But it's a subjective opinion, you know. Beginner jiu-jitsu, hey, maybe. Where is Meta, bro? It's been so long since I've actually looked at Meta. Meta's still at 320s right now. Yeah, quad witching is Friday. It's technically not quad witching though. Again, quad witching is a day in which all 4 major contract types expire same day. So that means stock futures, index futures, stock options, index options, right? The problem is that there's no such thing as stock futures anymore, right? So it's tri-witching day now. It's not quad, it's tri. I mean, people still call it quad because it's just the name it gets now. It happens 4 times a year, but it's not quad, it's triple witching day now because we don't have stock futures. I wish we did because then I could trade stock futures like that, but we don't, unfortunately. All right, guys, the Q still pushing up towards highs. The SPY still up there as well here. Meta moving up a little bit. Bonds have dipped a little bit, and typically there's a inverse correlation between bond prices and stocks. Pomp saying one of the best football players in the world is eating McDonald's before Monday Night Football, and you think your 13th cold tub this week is going to help you answer emails better. 100%. Honestly, resiliency is what means success. Doesn't matter what cold plunge you take. I tried that for a little bit, but CPI data is in about 25 minutes or so, 25 minutes. Still testing highs here. This makes me a little bit more skeptical. I always enjoyed striking more. Some Muay Thai was always my favorite, but I enjoy Jiu-Jitsu. Yeah, for sure. I mean, I've done a little bit of striking too. Mostly Muay Thai. Like, I wanted to learn how to chop somebody's legs down. And so that was like one of the things I learned was how to chop somebody's legs down. The way they taught me how to do it was they put a chair in front of me, right? They put a chair in front of me, and they put a heavy bag behind the chair, right? And so my job was to kick the heavy bag in front of me without hitting that chair. Like to kick the bottom part of the heavy bag. So I would have to go over the chair and back down, right? It was fun. When you learn how to do it, like, you know, you can chop people's legs out. That's what I wanted to learn. My kids also do it, right? So it's like I learn a little bit from my kids or from bringing my kids to their classes. And, you know, I'm pretty cool with my gym now. So, like, they'll let me play around on the bags too and stuff, so. I need bad CPI data. We'll see. I hope we get lower than expected CPI data, but nobody knows here. Also, I'm going to throw it in sub-only mode, team. If you haven't already, subscribe. We do this live for free every single day right here. We don't sell a course, don't sell a service, don't claim to be experts, don't act like gurus, don't charge for any content. We have no paywalls behind any of our content. Even become a member. Becoming a member is just a way to support the channel. Like, you don't get anything extra because everything's free here. We don't charge for content. So if you appreciate it, hit the sub button, hit the notification bell. Everybody announce yourself. Tell me you're subscribed. I appreciate the love. Thanks so much. So, I've been writing my dreams down, dude. My dreams are like dystopian nightmares, bro. They really are. Like, I've been having the weirdest freaking dreams, man. I've been writing them down a lot, too. So I've been writing my dreams down. So, y'all want to hear my dreams or no? I got a list of weird dreams, man. I think I told you guys my dreams yesterday. Tell us about your dreams. Hey, what's up, Wesley? Went lower than expected to be bad if they want 0%. I thought deflation was scary in modern economics. I mean, it depends on where we're at currently, right? If we want to hit 2%, we need lower. You know, that's the goal. It also depends on what the labor market looks like. Hey, thank you, Into. We here. Hey, what's up, team? Appreciate the subs, guys. Thanks so much. Yeah, so here's my dreams. Alien forces take the planet over and separate everyone. The aliens look like these big walrus beings. It's hard to explain. I'm in Baton Rouge by the Circle K on Jefferson. One of the members of our group gets separated and stolen by the aliens and taken to be their spokesperson and then chained up and used for propaganda and marketing. It's all on Jefferson Highway by where the Noah's Ark used to be in Baton Rouge. A new dream. I'm taking an exam and many people come in trying to cheat off my exam, but I end up leaving it out in the weather because I was trying to hide it from everyone trying to cheat. And the exam ends up getting ruined and I have to retake it. My mom was trying to buy up some crappy motorcycle as transportation to get around. Weird weather starts to come in, destroying everything. Tornadoes show up, monsters hit everything around us. Homeless people start disappearing outside. So this girl I knew had a weird dad and lived with friends that I knew. Went to the same school as me, but we weren't dating. Her dad was slow and didn't understand what German shepherds were. What the heck am I talking about? Went to school and lined up outside. My now wife Carol was with me and walked around the neighborhood. Went to pick up cars, but were forced to listen to Nas by aliens. Cars started getting flipped on the highway. Here's a fun one. Went to Chuck E. Cheese and ran into Derek Jeter, and he was friendly with me and wanted to play racing games with me. Anyways, there's more to this. There's actually more dreams. I've been writing them down every time I wake up, but those are my dreams. You're welcome, guys. I'm going to start charging you for this, okay? I'll write these down as soon as I wake up. As soon as I wake up. You talk about martial arts, change in exercise levels seem to make crazy dreams. Maybe. Man, weird, radical. Intel is extremely strong this week. Yeah, microchips, man. Intel has had a lot of hype this week. It really has. Intel pushing up to almost 45. Look at the Q dip ahead of this report. So we still got 20 minutes, but look at the Q dip. So again, Intel all the way down at all the way up to almost 45. So Intel has had a really strong year, especially relative to a lot of other things too. Intel has been pretty quiet for the last few years though, so it's an interesting one because like Intel prior to the slump back here in 2022 had been basically sideways for 4 years. Started to dip. Now when AI started to take effect, it's starting to move back up. It's almost back up to 45. You can see the Q dipping down to 396.50s now. So the Q is falling down as well. Yeah, dude, I'm telling you, my dreams are literally like dystopian nightmares. I'm telling you, they're weird. Basement traders be like, next move will be telling. The next move's always telling. Yeah, I don't trade gold much. I invest in gold. Again, I'm going to tell you guys this, right? You get a lot of gold haters, and I get a lot of people hate on like older people who like gold. I'll tell you why the older population likes gold. Is because if you look at gold prices now, gold has been one of the best assets to hold over the last 25 years. Gold has 7x'd since 2000. 7x'd. So gold has gone up 7 times its value in 23 years. Since 2000. Now, when you compare that to the S&P 500, which I think is like 3 to 4x, so Gold has almost doubled the gains of the S&P 500 over the last 23 years. You can compare that to silver. Silver has done like 6x. So precious metals have appreciated much more than the S&P 500 has over the last 23 years. Now, the S&P 500 has still done well, but when you compare all the different inflation hedges, and these all are inflation hedges, right? Real estate, gold, the S&P 500, the NASDAQ, you know, Apple, whatever you want to use, these are all, the vehicles are used to hedge against inflation. If you sit on cash, you're going to lose money over time. That's an inevitable thing because your dollars are devalued over time, and over time prices go up. It's one of the reasons if you look at a house price in the year 2000, you're going to get a much better house for less in the year 2000 than you're going to get now. Why? Because inflation happens over time. And so if you're sitting on money long term, you should be hedging against inflation. If you're not, you are losing money. And with all that said, gold has been one of the best inflationary hedges over the last couple years. Speaking of gold, gold is ripping up. It's almost up to 2008 right now. Q is bouncing right off of that volume weighted average price level. All right, guys, 15 minutes. 15 minutes. I mean, Bitcoin's interesting too. Again, one of the big people always get so polarized with like different investment vehicles, right? What I'll tell you is that typically the best move, if you want to know what the best move, it's diversifying is the best move, right? So I see somebody saying everybody in their 20s don't care about gold, they want Bitcoin or whatever it is. Diversifying into a little bit of everything is usually the right move, right? And so again, if I had to hold something for 20 years, this would probably be my portfolio. And again, this is my portfolio to a certain extent, but it's a little different. But still, if I had to hold something for 20 years, I would buy the S&P 500, the NASDAQ, the Dow, gold, silver, some type of real estate ETF or actual rental properties. I'd diversify a little bit into bonds, so I'd probably buy some bonds just in case. I would definitely buy some cryptocurrency as well, maybe 20% crypto, and I would just let that sit. Right, that would be my long-term portfolio. That portfolio is almost certain to gain over the next 20 years. Right, if you hold that. Again, I can't. It's never for sure 100%, but that portfolio is almost certainly going to be up over the next 20 years. Now it depends on a lot of different things, but diversifying is usually the right move. That way, if you're wrong about one thing, you're still going to be okay. Google and Apple Catalyst. Let's see. All right, so U.S. lawmakers are calling for raising tariffs and severing economic ties with China. I don't know. It must not be that big of news if it was. All right, again, we got CPI inflation data dropping. We got about 1,500 people here live. You can see the CPI data here. We're going to report it right here. Friday is triple witching, Shepard. So, I mean, they're going to call it quad witching, but there's no such thing as stock futures anymore. So, Friday is triple witching. Yeah, CPI, we're going to report CPI as soon as it comes out right here at 8:30. I mean, the Vanguard real estate ETF's probably the standard, but it depends on which one you like. Do people use Bitcoin? All right, look at the market break highs again. So again, the Q just ripped over highs at 396.90s right now, 396.90s. Is there any real estate investment trust you like? Yeah, there's a couple. I mean, I'm not sure which. I'll have to look to see which ones. Pessimists are in the house today. They're always here, man. And again, you got to understand, a lot of the time the people that are really betting against the market are people who are either in like a country that doesn't like us, right? Like that's one of them. The other groups are people who are super biased on like the political spectrum. So if you dislike the current administration, confirmation bias might make you want the market to struggle during their term, right? Because that'll reflect more negatively on them, right? And some people get really wrapped up in politics to where that's what they want. I'm pretty neutral politically, but like you got a lot of reasons why people are bearish, even if it's against, like even if it's like super long term where it's against the the edge, where it's trading against edge, in my opinion. Over the next 20 years, the market's going to go up. If you think it's not, you're trading against edge. Love you. Good luck. Have a good day. Good luck. Yeah, so my daughter's got finals today, so she's stressed. Ford says it's cutting the F-150 Lightning production by 50% in 24. Yeah, she's got finals. All right, so again, the SPY ripped up. You see gold popped up to 2008. It's now dipping back down a little bit here, team. Yeah, that's my daughter. All right, guys. Here we go. We got 10 minutes here, team. 10 minutes. Hit the live button next to the play button. Hit the subscribe button, team. Here we go. Good luck. All right, so Lou says, explain something to me. Why would anyone buy at the top? Which top, bro? Like, you're acting like there's one top and there's not. Like, look, here's the cue. All right. Over time, the market is going to go like this, right? So over time, the market's going to go like this. It depends on the time frame you're referencing, right? Over time, this is going to happen. So if we know this is going to happen right here, okay, and we're not even anywhere, like we're still pretty, like we're still got a little bit of ways away from the lifetime high of 408, right? But if we know we're going to go over that lifetime high long term, that's the mentality you have to have. Again, no matter which way you look, a lot of the time bears are bearish. Like, one of the reasons people disliked me over the last year is because I was telling people the same thing back here, right? When the SPY and the S&P were at these dipping levels, everybody was screaming the market was going to crash. I told people the same exact thing, that the market doesn't have to crash, that market crashes are very rare, and that really we've already had a pretty major correction in 2021 and 2022 that we're now just coming out of. We're now bouncing out of that correction that we had in 21 and 22. Right? And so people acting like we're just about to crash, like we're ripping up, breaking highs every day is not accurate. We haven't broken this high since 2021 or 2020. When was it? We haven't broken that high since November of 2021. So it's been years since we've been anywhere close to these highs, and we're still a little ways away from it. But I guess my point is that over time we're going to break highs, you know. All right, guys, we got 1,800 people here, guys. We still got about 8 minutes left. 8 minutes. Yeah, I mean, you could start to calculate inflation, but again, it's kind of nonsensical, Martin, because what the S&P 500's purpose is to keep up with inflation, right? So calculating it like the market's not really up, because if you look at inflation, I mean, it's just a way to try to be bearish unnecessarily. Again, what the market's trying to do is keep up with inflation. You know what I mean? So, like, I mean, we could calculate it with inflation and it's going to be about break even or maybe slightly up or slightly down. But that's because the sole purpose of the S&P is to keep up with inflation, brother. You know? And again, maybe we do dip. Maybe we do crash. What I'm trying to teach you guys is to ignore the YouTubers that are constantly like constantly predicting market crashes every 2 months, right? Because if they predict crashes, they get more views, they get more clicks. You know what I mean? So it's confirmation bias for them. They want us to have big pullbacks so that they can write about it. And I'll tell you this, my biggest view streams, right? We got about 2,000 people here. My largest streams we ever did were in the middle of market crashes and bearish markets. CPI, my biggest CPI report ever was during bear markets, right? Like scary bear markets where everybody's scared, right? So I get more views when we're bearish, right? I get more views when there's fear and doom and gloom reigning supreme, right? Like my channel does better in those moments. But I'm not going to just tell you guys that the market's always like that to get views. I would rather have some credibility and be honest. And again, if you look back at what's happened for the last year straight, I was absolutely right. I told people we didn't have to crash and that the market was already extended on the downside and that we were probably going to push up. And if you look at what the market's done, it's done what, like 15 to 20% over the last year? And again, maybe we do crash. Maybe we do dip. A statistic that we saw is that there's only been 3 events in history in which the S&P 500 has had more than one red year in a row. Right, 3 times in the history of the S&P 500 in the markets in general. And so people predicting that like it's going to happen regularly don't understand the market. Gold bearish? Maybe. I mean, gold's over 2,000. I'm not sure. You know, I think there's some extension heading into this report today. So I do think there's some extension heading into this report. So far, market crash today? Maybe. Unlikely. All right, guys. Hey, we got 5 minutes. 5 minutes. Put your last minute predictions out in chat. What do you guys think CPI is going to come in at today? Year over year. Expectations are 3.1%. Month over month, it's expected at 0%. Where do you guys think it's going to show up at? What do you guys think it's going to hit? Let me know. Hey, we got 4 minutes, 4.5 minutes. Let me look at our Twitter poll. I haven't even looked at it yet. All right, so we got some votes. 46% think we're going to come in higher than expected for CPI on Twitter. 38% think lower. 16% think as expected. Look at the SPY or the Q break highs here, teams. There's the Q ripping over highs at 397s. 397s. Looking at our YouTube poll, we got about 2,000 votes. 56% of people think higher. 44% think lower. And so same thing here. Most people think we're going to come in higher than expected for CPI. Some people think we're going to come in lower. All right, team, we got 3 minutes. Make sure you hit the live button next to the play button here, team. You want to make sure your live button looks like this. Again, you want to make sure your live button looks like this. You want to make sure it has a red dot next to it. That's how you know you're fully caught up on stream. If it doesn't have a red dot next to it, you're delayed. And so again, hit the live button. Make sure your live button next to the play button looks like that. It has a red dot next to it. 2.9%, 2.85. Again, you got to make sure you hit the live button next to the play button. Full bull, 3.1% is expected. Yeah, on the year. 0% is expected month to month. Yeah, it's not going to be some big, it's going to be a, you're going to want to round your percentages. It's not going to be 3.23857.6%. It's just not going to be that. 2.9%, yeah, maybe. I hope it's at 2.9. That'd be 0.2% better than expected. Q is rocketing because insiders already know it's going to come in better than expected. Maybe. Unlikely, but maybe. I hope so. I hope we're lower than expected here. Again, team, I really do. All right, team, we got 2.5 minutes. 2.5 minutes. We got almost 3,000 people here live. You guys ready? Again, we get thousands of people tuning in because we cover this data quickly. All right, so we cover this data fast. It's one of the reasons we get so many people here for these streams is because we cover it quick. So if you appreciate it, hit the subscribe button, team. Let's do this. Core CPI expected at 4% year over year, 0.3% month to month. Regular CPI expected at 0% and 3.1% month to month. All right, team, you guys ready? Less than 2 minutes. Less than 2 minutes. This channel's getting bigger than CNBC. Maybe on the big reports. Sometimes we get some pretty good views. Definitely top 3 largest channels ever. All right, team, we got a minute and a half, team. A minute and a half. Gold ripping up to 2007. Again, the Q's been pushing up higher and higher. Bitcoin to 100K. Hey, I hope so. Big short. We'll see. We got 1 minute, team. I'm going to pause this. This is a little bit late, actually, so I'm going to pause this timer. We actually have 1 minute exactly right now. 1 minute exactly. Less than a minute here, team. Less than a minute. Again, hit the live button next to the play button. Make sure you're fully caught up on stream, team. We appreciate it. We got about 3,000 people here. We got 50 seconds left, about 45 seconds. All right, team, 30 seconds. 25 seconds. We got over 3,000 here. 25 seconds. Whew. All right, guys. Remember, lower is better for inflation. Higher is worse. Lower is better for inflation. Higher is worse. 15 seconds, guys. Make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. We got gold on the right. We got the Q on the left. The NASDAQ on the left. Gold on the right. Here we go. 5 seconds, 3 seconds, 2 seconds, 1. And there's the report. All right, CPI showed up at 3.1%, guys. 3.1% year over year. It showed up at 0.1% gain month to month. So higher than expected month to month. Neutral year over year. So again, at 3.1% year over year, 0.1% gain month to month versus a 0% expected. Again, so neutral here. Core CPI showed up exactly as expected today. Exactly as expected. 4% year over year for core. 0.3% month to month for core. Regular CPI was mostly neutral, except for 0.1% gain month to month. So CPI actually went up a little bit month to month. A little bit higher than expected CPI month to month. So again, CPI actually went up a little bit month to month. It came in at 0%, or it came in at 0.1% month to month versus 0% expected. And so again, it's slightly negative report here, slightly negative report, but my guess is because the market pushed up so much in anticipation of it, we're basically neutral here from this report. So again, we'll put this up on screen. We came in at 0.1% month to month. All right, we're putting the core numbers up. Market's actually doing okay right now, though. So core CPI came in at 0.3%. So we'll put this up on screen as well. Again, here's the report right here at the bottom. Team, there's the report. Market's actually surging up a little bit, but again, it came in slightly negative. But it was mostly neutral. We came in neutral for core CPI month to month and year over year. We came in neutral for year over year CPI. The only one that we came in higher than expected was base month over month CPI, which came in at 0.1% gain versus 0% as expected. Nobody cares. I mean, we got 3,600 people here, so somebody cares. Is this bad for the U.S. stock market? It's mostly neutral. Gold is actually ripping up. Gold is actually ripping up. And again, if you haven't already, guys, check out Top Step. If you want to day trade these economic reports, you see we day traded a little bit this morning. You can basically day trade the Q. You can basically day trade the S&P in futures, no PDT rule. This is Top Step. It's a funded account program in futures. I can day trade short. Here's the NASDAQ running up a little bit on a 1 minute chart. And again, I can't day trade this. I'm going to wait for it to settle down. I can buy market, sell market, all that good stuff in futures. And there's no PDT rule. I can day trade short in futures, no PDT rule. The most legit funded program in futures is Top Step. They're a funded account program. They test your skill by giving you a demo account. And if you could pass the test, they fund you between 50 to 150K with a 90% split once you're funded. And you have to understand, most day traders lose money. And so you can either put up thousands yourself trying to look cool. You can try a cash account. Or you could take a funded account program. You still have some pressure to succeed and just taking these build your skill. If you're good enough to pass it, you still get a 90% split once you're funded. If you're not good enough to pass it, you're only out $49 for the base combine, or a little bit more if you pay for the higher ones. And that way, it's limited risk, but the reward is similar to putting the money up yourself. There's no PDT in futures, and so it's a great way to day trade with less risk. The liquidity is good in futures as well. And again, the patterns in the S&P 500 are very similar to other blue chip stocks. There's just no PDT rule. And so a great way to learn day trading, the most legit one in the world, they pay out millions, fund thousands of traders every year. They pay out millions in actual withdrawals. They've been around for over a decade. Great way to learn how to trade. Here's the link if you want to check it out. They are a sponsor of mine, though, so I'm super biased in their favor. This is the first plug we've done all day, and so we're going to do the plug now. But there's the link if you want to check it out. You can also find the link in the description, team. We appreciate the love. Again, learn to day trade with less risk. If you lose, it's not the end of the world. And I think most day traders lose money. It doesn't matter whether they go top step or not. Most day traders lose. It's just a lot cheaper to lose here than putting up thousands yourself. And it's what most pro day traders actually trade futures. And so check it out. There's the link. Get around the PDT rule using what most pro day traders use. All right, so the market's starting to slump a little bit after this report. Again, we didn't have a big reaction. For CPI, this is actually a pretty underwhelming reaction here. This is actually a pretty underwhelming reaction for CPI. It is very small, very light. We're still over the 200 EMA. We're still over the volume-weighted average price. But again, this report, I would say, is slightly negative. This report is slightly negative. I wouldn't necessarily say this is like a great report. Again, CPI came in neutral all around except for month over month. But month-over-month CPI is a pretty big reading, so it increasing 0.1% when they expected it to pause is not good, really. Not good for inflation, that is. Now, again, we still got a lot of stuff coming out this week. We still have PPI tomorrow, which is the other side of the inflationary coin. And again, we're going to day trade at the opening bell, team, so stick around. We're going to day trade at the open. But yeah, I mean, I think this is probably seen as pretty negative right now. I think this is probably going to be seen as pretty negative. Yeah, so we're shorting this right now. We're shorting this move because, again, I thought this was negative. You can see we're currently up. And this is the NASDAQ we're shorting. All right, so we just got out of that. We shorted that really quickly here in the NASDAQ. So we scalped it. I thought we might react. We'll probably maybe short some more. This is, again, this is not the best report, I think. So we just made on this trade about 200 bucks. You can see we're up about 2 on that trade alone. We'll see if we get another trade in here in futures. But this is futures. You can see we're kind of buying market, selling market, all that good stuff. There's just no PDT rule in futures, so I'm actually able to do this. All right, so we just scalped a little bit more here. All right, so now we're bouncing up. Pump it. Market's gonna run up. Yeah, we'll see. Again, the inflation data was actually kind of negative though. So like this report, I wouldn't say was good necessarily here. Yeah, so again, you can see we ended up trading off of this cushion. We're up about 300 on the day now. About 3 on the day. And again, I don't know what we're going to get. We'll keep trying to attack this bearish action. Again, I think the report's slightly negative, and I think we pushed up a lot in anticipation of it. So I think we might have like a delayed reaction here, but we'll see. Oh, I'm certainly biased. Everybody's biased. But I don't think saying this CPI report was kind of negative is crazy. I mean, again, we had neutral reading mixed with a negative month-over-month reading, right? So it was slightly negative, to be honest. Let's just be real here for a second. The CPI report was slightly negative. And the market's just kind of underreacting to this so far. It's not really reacting the most to this currently. No rate hike today, though. Well, the rate hikes would be tomorrow. Tomorrow's the FOMC meeting, not today. Today's Tuesday. The FOMC meeting's on Wednesday. Down NASDAQ. Yeah, we'll see. Again, I hope we get some good action here today, too. Again, we're going to get ready to day trade the futures market if we can. Gold started to dip down some. And remember, we're day trading the futures market where there's no PDT rule. So I could day trade, like a lot of people try to trade like a cash account, and I really don't understand why. Like a cash account is so restrictive. You can literally only take one direction in a cash account. You can only go long. You know how restrictive that is to actual profitable trading? Again, the futures market, like the patterns in something like the NASDAQ are very similar to the patterns on something like Tesla or Apple or Amazon or Google. You know what I mean? But there's just no PDT in futures. And again, the easiest way to get exposure to that are these funded account programs where you can day trade short, you can buy market, sell market, all that good stuff. There's no PDT rule. Great way to learn how to trade. And most traders lose. Like most day traders lose money. It doesn't matter whether they're on Top Step or they're on TOS. Most day traders lose money. It's just a lot cheaper to put it on Top Step than to put thousands of dollars up yourself. When I first got started trading, bro, I lost thousands of dollars in the beginning. Literal thousands in the beginning. And so, yeah, I mean, the way to do it is to try a funded account program. And if you lose, it's not the end of the world. If you're good enough to get funded, 90% split once you're funded, you get to keep your first 10K in profit as well. In actual withdrawals, there's free funding coaches, tons of resources as well. When I first got started, I was using a platform called SureTrader, right? If any OGs in the market, y'all might remember this. I've been trading for years, but I was using a platform called SureTrader. They gave you like 6-to-1 leverage, was really sketchy. It was really sketchy, gave you like 6-to-1 leverage. I remember I would try to day trade and just get absolutely destroyed. I remember I saved up like $4,000 at the time. So I saved up like 4K at the time, and my wife was like, John, I don't know if you should. And I was like, nah, baby, I'm smart. I'm going to get rich. I've been watching Tim Sykes, I'm going to just get rich. In hindsight, my wife was right. I should have never risked that money. I wish I had something like these funded account programs when I was around. I really do. I wish I had something like that when I was around. I would have lost much less money, But again, I'm biased. Like I said, they're a sponsor of mine, so of course I'm biased. Yeah, good old SureTrader. I never understood why people don't want to put a few $100s into a funded challenge but blow thousands in their own account because they're trying to look cool on the internet. They get it in their head that these funded account programs are worse. But like the reality of it, most people lose regardless of which way you go. You might as well limit your risk instead of trying to look cool on the internet. Definitely top 3. Hey, you know how it goes. Top 3s in the world for sure. I mean, are you in a trade? I mean, I'm holding a bunch of stuff. I trade a lot off stream, on stream. Like my equities portfolio is currently this. We're up about $1,500 in it, but it's Apple, AMC, ARM, Amex, Citigroup, Chewy, Disney, Etsy, Ford, Gold, GameStop, Google, Home Depot, Honeywell, Coca-Cola, MGM, Microsoft, Netflix, Nike, Oracle, Pfizer, PayPal, RTX, Snapchat, SPY, Square, Tesla, Tyson Foods, Walgreens, Walmart, ExxonMobil. Again, we're up about $1,500 in it. We've taken a lot of profit along the way, though. You don't own the money back that you lose. You're only out what you pay for the funded account program. I don't think they have crypto as a withdrawal. And again, I'm not sure if y'all could even, I mean, they're not allowed in some countries, but they are allowed in most countries. I would check on the site first. Again, they're a sponsor of mine. You always want to check everything with them. He just became Eminem. Yeah, mixtape coming soon. I've been saying that, but nowadays kids don't even know what a mixtape is. What's the quote now? Bars is the new quote. What I try to teach my daughter is that everything young people think is unique to them is not. They're just stealing it from older generations. Markets didn't react negatively. I mean, yeah, we did. We slightly reacted negatively. I mean, we're not super down, but again, if the report came out here and we are now down here, what does that mean? Anybody at home? What does that mean? That means markets reacted negatively. You're welcome. Hey, congrats. Congrats, Douglas. Inflation is sticky. Yeah, for sure. Dropping bars. Hey, you know how we do it here, you know. Hey guys, listen, we're under 200 likes away. Under 200 likes away from hitting 121,000. Under 200, guys. Listen, I'm not going to pressure you to subscribe, but do it now or I'll hate you forever. Okay, subscribe now, team. Do it now. What's good for inflation is bad for markets. Correct, yes. Basically, higher inflation is worse. Lower inflation is better. We're scalping a little bit more in futures here, team. A little bit more in futures. I guess I'll put this up on screen. Again, we're up about $160 on the rest. We're going to ride this breakdown here. Again, I thought we might get a delayed downward reaction from inflation. All right, we just got out about $220 up. Let's see what we're up on the day now. Ooh, we are up. And again, the way I always do it with these funded account programs is I try to build up a cushion first. So we are currently up on the day about 756. I thought we might get a little bit of a delayed reaction here. Again, CPI came in neutral, but slightly worse than expected month to month for base CPI. And now we're starting to dip. Again, a lot of things make this prediction a little bit easier, meaning one, we went up a lot ahead of CPI, so the market was already kind of extended on the upside prior to CPI's report, as well as like everything was neutral except for one negative report. So there wasn't anything better than expected. There was only one that was worse and the rest was neutral. And so again, I think we have to interpret that as a slightly negative CPI report. FOMC is tomorrow. FOMC is tomorrow at 2 p.m. Eastern Standard Time. We're going to stream that live like we always do. What do you think we got? AI? You mean C3? Again, I can't guarantee you're going to make money on Top Step. Nobody can. They're a sponsor of mine, but I think they're incredibly useful, of course. I'm not sure, super affiliate. You'd have to check with them, brother. Yeah, tomorrow is the biggest day of markets. Again, tomorrow we have PPI. So again, there's two sides of the inflationary coin. We got CPI, which is the consumer price index. It's the biggest inflation metric we get. And then we have PPI, which is the other side of that. It's tomorrow. It's the producer price index. It's basically sellers. While today is consumers, tomorrow is sellers. Although PPI typically has a less predicting move to markets. Like, it's much more difficult to predict PPI, in my opinion, than it is to predict CPI, or at least the reactions that come from it. Like, we can have a slightly negative CPI report, and I can tell you guys, hey, I think we might dip a little bit more, and then we do. Again, I said that where? Probably like right here. And then we did dip, as I predicted it. And again, I'm not saying you should predict it afterwards, but you can react to these moves a little bit better with CPI. With PPI, sometimes PPI will come in much lower than expected, and the market will just tank. Right, which is the opposite to convention. And so PPI is a much more difficult one to predict, in my opinion. But that drops tomorrow. It's still a very big report. We will have thousands of people here for that one as well. So stick around, hit the subscribe button, hit the notification bell. Again, we will have thousands of people here for PPI like we always do, team. So again, subscribe if you haven't yet. We'll be here live. The big thing that this channel has, again, I don't claim to be an expert. I don't act like a guru. I don't charge for content. We don't sell content or sell courses or anything like that. Everything we put out there is free. I don't claim to be a great trader. I don't claim to be an expert. I don't want to be a day trading guru. We just report data fast, and the reason we get thousands of people here is because we cover it quickly and reliably. And so if we have something big going on in markets, you know you can watch it here, and we stream all of it live. We stream CPI, PPI, jobless claims, FOMC meetings, the full press conferences as well. You can watch them live right here with us. Earnings as well, team. So again, subscribe, hit the notification bell. We appreciate it. I mean, it depends. Whether C3AI is going to do well is going to depend on how they can execute. I joined to tell you there was no such thing as a mixtape in my early days. Yeah, now there's no such thing. I mean, there's a mixtape now, but I think people just say bars. It used to be mixtape coming soon, but now it's bars. It's just recycled from generations. You know. Dollar index is probably up a little bit now. Dollar index typically has an inverse correlation with markets. And yeah, you can kind of see it. So the Dixie is now at 103.80s. So Dixie moved up a little bit. Starting to pull back some, which might indicate a bounce in the NASDAQ now. But who knows? Hey, what's up, mister? Hey, thanks. Appreciate the love from the UK, huh? My last name is London, London, so... my ancestry is from England. Although I did one of those 23andMe DNA tests. And again, I've told you guys this before. But I'm mostly English. I'm like 60% English. I got a bunch of other stuff too in me, but... But every time I talk to anybody from the UK, I got to tell them, yo, my last name is London. You know, I was 60% English, 15% French, 4% African, believe it or not. A bunch of other small percentages, but those were the three largest percentages. Yeah. Here's a question. Do y'all think Warren Buffett actually drinks Coca-Cola? Or is he just is he just shilling his holdings? Right? Like, I think it's rather convenient for Warren Buffett, every time you see him, he's drinking Coca-Cola and hitting up McDonald's when some of his largest portfolio holdings are McDonald's and Coca-Cola. You know, so the question is, does he really drink Coca-Cola and eat at McDonald's, or is he just waiting for a camera to show up and now all of a sudden he's drinking them and eating them every day? You know what I'm saying? Like, I don't trust Warren Buffett in that regard. I think he's a smart marketer and he knows how to pander to people. You know, what? Who in the world said that, come to understand? Warren Buffett's blood type is Coke Zero. That means I get a pass? Hey. Tell me Bitcoin prediction. What did Bitcoin do? What did gold do from this? Here, look at the NASDAQ go down a little bit. Here's Bitcoin. Bitcoin's mostly flat, over 42K. I like Pepsi better too. No, not gonna lie. I do like Pepsi better than Coca-Cola. You know, it just tastes better. Listen, personally, you know, it just tastes better. Gold. Mostly doing what the S&P 500 is doing. Gold actually just dipped under 2,000 for a little bit. My point is, everybody's always like, oh, you know, Warren Buffett loves Coca-Cola. Does he really, or is he just holding a huge position in Coca-Cola stock? And so every time you see him, he's drinking Coca-Cola, you know. Yeah, I used to love Mountain Dew, bro. But as I get older, right, sugar scares me, right? You look at Mountain Dew, it's got like 80 grams of sugar in a bottle. Freaking 80 grams of sugar? I sound like my parents, but like still, I can't do Mountain Dew anymore, man. It's too sketchy, you know. I'm at the age now where if I eat a cupcake, I feel guilty, you know. Surge, I do remember Surge. I grew up in the 90s, so Surge was like the thing, you know. Just good marketing campaign. You can learn a little bit from Surge's marketing campaign. If you make kids feel cool, you're gonna sell products. Same thing Apple's doing, right? A lot of people are like, "Oh, Apple's not gonna be around." Bro, Apple is incredibly slick with their marketing. All right, they do small things that make the young people want them, right? So if young people are in a group chat, they're gonna get ostracized if they don't have an Apple device. You know, so if young people are in a group chat, they're different. Their name looks different than the rest of the people in Apple. And young people are desperate to fit in. It's in their biological instincts. They want to fit in. You know, and so what does Apple do? Apple makes you look different in their group chat if you don't have an Apple device, bro. I swear, I could buy my daughter the coolest Samsung in the world. I'm actually a Samsung guy. So like I actually have the Z Fold phone. I'll take my case off real quick. I actually have the Z Fold phone. These things are cool, right? Like I could buy my daughter a brand new one of these. She would not take it. She would not take it. I could say, hey, you could have this or you could have like a cheap Apple phone. She would take the cheap Apple phone all day, right? Young people want to fit in. And in that regard, Apple's going to do fine long term. Why? Because they got the lock on young people, at least here in the US, which is a huge, you know, over 300 million person market. Apple's smart with it, you know, and so Apple's going to be fine long term. It's one of the reasons I invest in Apple is because Apple is very smart with how they do things in that way. The rest of the world uses Samsung to a certain extent, though, but still. Yeah, I read the macros now. Yeah. Yeah, for sure. I drink a Coca-Cola. I feel guilty, man. Yeah, I took this years ago before we found out what they were doing with my data, but it's all right, I guess. Yeah, I mean, I'm at the age now where too young, like if I don't know. I'm at the age now where real young people and teenagers will speak to me, will condescend to me regularly because I'm too old. Unless I roll with them in jiu-jitsu, then they're getting guillotined. But still. Yeah, again, CPI data slow leak down, and then slow leak down. Dollar index still slightly moving up. Gold back over 2,000. We can look at the S&P 500 here as well. Put this up so we can see both. All right, so here's the NASDAQ on the left side. Here's the Q. Q's still technically green, though, even on this report here. Let's look at the SPY and see how the SPY's react. The SPY's technically red on this report now. I don't think we have anything else today, right? Nope. We got the federal budget stuff dropping at 2 p.m. Yeah, freaking whippersnappers. Get off my lawn, guys. That's all I'm saying. I'm in my 30s, for those asking. Although you can't tell right now, you know. I still grasp it on to my young age. Bond auction, yeah. Yeah, I mean, most penny stocks are crap. You know, I hear so many people push all these penny stocks. Again, if you're investing in penny stocks, if you're a penny stock investor, you're losing money. You know, in the end, I'm gonna go over this again because it's important for people to understand. If you're investing in penny stocks, you are playing a losing sucker's bet game. Almost all penny stocks are gonna fail, right? The argument I always hear, well, what about Tesla? Tesla was a penny stock. You know what? You know the odds of you picking the next Tesla in penny stocks? They're so freaking low. Do not invest in penny stocks. They're terrible companies. They have all this sensationalized marketing out there trying to fool a bunch of small account retail investors to put their money in and waste their money, right? Think about it. Think about the Wolf of Wall Street. Aerotine International, cutting-edge firm out the Midwest awaiting imminent patent approval on the next generation of radar detectors, right? Nonsense. Total nonsense, right? Now think of the marketing for some of these penny stocks. Same thing, same aspect of it. You know, they're trying to talk a bunch of retail investors into putting their small accounts into penny stocks, and almost all of them are going to lose money. You hear them come to people's streams over and over again saying, this one's going to be the next one. This one's ready to run. They never are. You know, you can learn from the AMC and GameStop community. If the community's trying to make you feel all warm and fuzzy just to hold the stock, run away as fast as you can. All right, you know why? It's because Apple doesn't need to do that to get people to buy their shares. Amazon doesn't need to do that to get people to buy their shares. The only companies that need to do that are ones trying to talk you into holding a wildly depreciating asset. Do not do it. I'm sorry. If you mention penny stock, it's like a pet peeve of mine. I probably do look 16 without a beard. Look, here's beardless John. You want to see me? If you become a member, you get access to these coveted emojis. Here's the gauge. You want to know the gauge? Does somebody shame you for selling it? If you sold your penny stock and unloaded your position, do you get shamed for it? If the answer is yes, run away from that stock. Sell it as fast as you can. I'm not telling you what to do. I have no idea what happens. I might be wildly wrong and have no idea what I'm talking about. Don't copy me. Don't sue me. I'm not an investment professional. But with all that said out the way, run away if you get shamed for selling. Run away if they try to make you feel all warm and fuzzy like you're some type of moral investor, like you're helping to punish the hedge funds by sitting in this stock. You know, you're such a great guy. Just lose money for us to punish the hedge funds, guys. Don't do it. Think about it. Your thoughts on Walmart? I think Walmart, my honest opinion of Walmart is that it might lose market share over time to more mail order products like Amazon and stuff like that. But Walmart's always going to have an innate need. It's going to be the one-stop shop store where you can get groceries, you can get other stuff there. And so I think in that regard, the convenience factor of being able to go and pick it up same day is going to keep Walmart alive indefinitely for a long time. Relative to a lot of other brick and mortar retailers, I think Walmart's going to have more resiliency. You know, you compare that to something like Big Lots. You know, Walmart's going to be much more resilient than them because Walmart is going to do well regardless of what kind of economy we have. But you can't ignore technological growth in mail order products like Amazon. You know, so I think over time that might chip away at some of their market share, but I think Walmart's always going to be around. Same thing with Target. You get a lot of viewers. Props to building the channel. Hey, thanks so much, man. We appreciate it. Yeah, and again, people hear me rant about penny stocks every day. I do at least one daily penny stock rant, man. And again, if y'all were me, y'all might too. My job is to help traders. Like, I don't know how many traders I get here. Like, and again, here's the flaw of thinking. All right, like here's the real flaw. Is that people have small accounts. Right? Like people have small amounts of money. A lot of people don't have large accounts to be able to buy Amazon or Apple or whatever it is. So a lot of people don't have that type of money. And so they think that since they have a small amount of money, that their only option is penny stocks, right? Which is just flawed thinking. You could buy one share of Apple. Here's an example. I'm holding Netflix right now, and I want you guys to see this trade. I'm holding Netflix right now. All right. It was a much larger trade. But again, I've got a almost $70,000 equity count on TOS. I've got over I've got 200 plus thousand in buying power intraday. But if we look at this, I'm holding one share of Netflix. One share right now. And I'm up almost $100 on that one share of Netflix. All right. And so my point is that you can invest in the blue chip companies with small accounts, right? And have pretty good returns if you pick the stocks correctly. You don't have to invest in dog crap companies. You don't have to. You know, there's a reason they're crappy companies. You know, most of the time, even the CEOs of penny stocks know they're losing companies. A lot of the time, the pump and dumps and the offerings and all this stuff, a lot of the time, the company CEOs themselves are pumping the companies up to where they know if they unload their shares at the top, they're going to make millions of dollars, right? A lot of the time, the company's pumping themselves up. The CEO themselves is unloading the shares and riding off into the sunset a millionaire from it, leaving all the shareholders losing. That happens a lot as well. And so a lot of time, even the CEOs behind some of these penny stocks don't actually believe in their company or not, but they're trying to talk you into sitting on them. Would you rather have a fraction of a cake or a whole pie of steaming, a whole pie of steaming poo? Hey, 100%. Yeah, when I say penny stocks, I usually mean small market cap stocks under $10. CGC, Cannabis Growth Company. Cannabis stock, man. Again, the cannabis market, though, the problem with companies like this over time is that neither side of the political spectrum wants to legalize cannabis, regardless of what they say, right? Both sides get too many political donations from pharmaceutical industry and the prison industry to legalize cannabis. You look at the biggest anti-cannabis lobbying group in the world, it's a company called Abbott Laboratories. They have donated large sums of money to both political sides. And so what you see happen is that both sides don't want it legalized. They can pretend they do. Both sides don't want cannabis legalized. That's why the cannabis market and stocks dwindled like it did. Is because neither side really wants federal legalization. Again, the pharmaceutical industries do not want cannabis legalized at all. The alcohol industry certainly doesn't as well. Right? And so what they do is they donate, they send PAC money to politicians on both sides. And those politicians conveniently find ways to keep it federally illegal. Either by putting out bills and stuff like that they know are not going to get approved. Like they put out bills that are so far outside of agreement from the other side that they know it's never going to get, they're never going to get approved. They're never going to go through. And so they do it either that way or they just veto bills. They veto whatever they want. It's one of the reasons like you hear big modern politicians on both sides still be again, objectively speaking, keeping cannabis illegal is doing far more damage than legalizing it ever will. Why? Is because you're creating a much more profound criminal network by keeping it illegal. You know, a lot of people say, hey, well, what about legalizing another drug is bad, right? Yeah, sure. But people are going to consume cannabis regardless of whether it's legal or not. And so by keeping it illegal, you're forcing people to go to sketchy criminal markets. You know what I mean? Where if you just legalized it and regulated it, you'd earn tax dollars from it, as well as people would have access to it in a much safer way. Like people are going to consume it no matter what. And again, I understand you could use that argument for a lot of other things, but I think the main argument is having an even standard of legalization. Like if you could sell liquor at gas stations, an objectively more harmful substance, there's no reason cannabis shouldn't be legal as well. It has an objectively less harmful toxicity. Well, no, for sure, Cal. But again, like I said, it's about having an even standard. And so that is not, even standard-wise, that's something that's pretty damaging regardless, right? Cannabis reduces inflammation in the body to a certain extent. We have like cannabinoid receptors in our brain. There's a lot of arguments for it, but The real question is that if cannabis was legalized, how would it affect cannabis stocks? A lot of people think it's going to help them, but there's also going to open up more competition for cannabis stocks as well. So there's a lot of nuance behind it in that way. I know a friend that fell into deep depression investing in other stocks. Yeah, I mean, that's how it goes. How to deal with the emotional part of trading. Conditioning through repetition. How do you get less emotional? Number one, you probably want to scale down your size. Yeah, you probably want to scale down your size. If you're really emotional about any position, you're probably trading too large. Whereas one of the single easiest ways to limit emotion is to scale down. Most people are trading too large relative to their account size because some guru on the internet's flashing crazy, unreasonable gains to them. Where most people, you're going to have to trade small if you want no emotion. Part of me wants to short this. I might take one contract of the NASDAQ here short. We've already made a big cushion on the day, and so we're going to take one small position here and see if we can catch a rejection. And if not, it's going to be a small trade. Oh, well, cannabis is certainly objectively less harmful than alcohol. Alcohol causes severe physical withdrawal symptoms if you try to stop it, and cannabis does the opposite, you know what I mean? And so it's something in which, again, objectively, it's certainly less harmful than alcohol, which is not a very convenient truth for a lot of people, you know what I mean? All right, so we just made another $100. We're up almost 900 on the day now on this one. You can see our gains there. I mean, I like real estate investment trusts long term, but I think short term the real estate market's kind of sketchy right now, especially commercial. Some people have a better risk tolerance. Well, everybody's different. It's certainly a subjective thing, what you like risking and what you're okay with risking. What I always try to tell people, though, is that the larger you try to trade relative to your account size, the more risky you're like the higher the likelihood that you're going to destroy your account. And so if you want to make money safely, you need to have a large account and trade small, but it's a range. Certainly, and it depends on the person and the trading system and the strategy and the sample size as well. It's mostly from the volatility that we got from the CPI report. We shorted. We identified that the CPI report was slightly negative, and we had even pushed up a little bit. So when we did that, we started to short this and ride this down, and was able to capitalize on it in that way. Hey guys, we only need about 109 subs to break 121,000. We'll certainly hit it by tomorrow. Yeah, and again, I'm not some big pusher of cannabis. I think if people use cannabis too much, it can stifle innovation and it can stifle work output. I also think that creativity-wise, though, a lot of artists and musicians like it for creativity. There's some interesting theories regarding it for that. One of the theories is that when you're not on cannabis, your brain is constantly analyzing what's significant enough to stored memory locations in your brain. And so your brain's basically scanning the environment saying, is this important? Is this important? Is this important? Do I need to save this for later? Right? And the theory is that when you consume cannabis, that your brain doesn't do that. So instead your brain is allowed to wander a little bit more. And in that regard, it may allow boosts in creativity from that, since your brain isn't hyper-focused on significant thoughts. It's able to think outside the box, go a little bit deeper. They theorize that that's why musicians and artists like it, because it could help creativity. Again, I can't say for sure either way. I'm not really, but interesting theories on it. I did a paper on it in college. Report's already out. Cut. Came at 8:30. You can see the numbers. We came in mostly neutral for everything except for month over month base CPI. The bond auction. It's at 1 p.m. today. 1 p.m. The 30-year bond auction. All right, so again, we're right around the break-even level. So if you look at the SPY's at around 462. We're right around that spot now, right around. Yeah, but that's such a dumb argument, bull trader. No offense, man. That's just a dumb argument. Coffee is a drug. You know what I mean? Nicotine's a drug. In some ways, an objectively more harmful drug than cannabis. Like, there's a lot of drugs that people consume regularly. I'm drinking coffee right now. That's a drug. You know what I mean? Like, saying drugs are bad universally is a silly argument. You know what I mean? It doesn't actually mean anything, man. And if you think they're in jail because of cannabis, or they're out there committing crimes because of cannabis, I mean, again, very narrow-minded view of things, I think. Dollar index is now pulling back a little bit. What's interesting is that the NASDAQ and the dollar index are kind of trending with each other, which is an interesting nuance of the market, man. Dollar index just bounced off the 200 EMA. Let's see if the NASDAQ starts to push up. All right, there's a crypto bill that was passed. Also, the Lucid CFO has resigned. So Sherry House, the Lucid CFO, just resigned. Lucid is what, LCID, I think, right? Yeah, I don't trust Lucid as a company. I think they're cool cars, but again, I think a lot of these up-and-coming EV brands are going to fail. They simply don't have the consumer base they need to succeed. The big boys like Tesla obviously are going to be fine, and the other big automakers are going to be fine, but the new EV companies most of them are going to fail, right? Why is because, again, take yourself outside of the stock market. You know, you might be holding some of these positions, but if you had never heard of the stock before, would you buy some of these companies? And the answer is obviously going to be no. Most people are not going to buy these companies because most people have never heard of them. And so you got to be smart here, guys. And again, a lot of companies like Lucid are going to fail. There's just not enough sales going on for them. Rivian's a little bit better. But even still, it's going to be an uphill battle, I think, for them. But they're a little bit better. Yeah, all good, Jonathan. Yeah, Rivian backed by Amazon. That's always a big plus for sure. Hey, thank you to UTS. They gave me a rate pause. They said they won't continue rate pause now. Yeah, let me look at the probabilities. NEO, I used to like NEO a lot more. Number one, though, I don't invest in anything overseas. After the Alibaba problem, so I haven't really seen this fluctuate so much, the CME Fed Watch tool. I mean, today's report's not going to be influencing this at all because it's all happening in December, and their decision tomorrow is already made. It might influence January, though. January, everybody's still expecting a pause. But the problem, I don't invest in companies like NEO. There's a big reason why. If you look at what happened to Alibaba over the last few years, right? Alibaba used to be this wildly successful company, and it still is. But Jack Ma criticized the government overseas, right? Then he disappeared for an extended period of time. Alibaba lost billions in value from that. There's just too much instability for me to invest in companies overseas like this. And again, NEO is an example of that. NEO, I just can't. It's harder for me to follow what's going on there, and it's harder for me to predict what kind of decisions they're going to make regulatory-wise over there as well. And so because of that, I just don't touch companies from overseas. It's just too risky. And again, if you haven't already, guys, check out TopStep, funded account program and futures. They give you a demo. They test your skill. If you can pass the test, they fund you. If you lose, again, it's not the end of the world. The base one's $49. So if you lose, you're only out $49. There's no PDT in futures. You can day trade the NASDAQ, the S&P, currencies, gold, silver. Patterns are very similar to large blue chip companies. There's just no PDT rule, so you can actually gain exposure to day trading them. And if you lose these, it's not the end of the world. Once you're funded, though, you get a 90% split. So the reward is similar to putting the money up yourself. You're just risking much less by trying it. Just taking the challenge, build your skill, and it really is a great way to learn how to day trade with limited risk. To check them out, here's the link. They are a sponsor of mine, though, so I'm super biased. We also have Quad Witching Day Friday here, team. No, not really. Oh, bro, I'm gonna do as many commercials as I want. Again, I'm definitely gonna do commercials. If you want to know why, it's because we don't sell a course. We don't sell a service ourselves. We don't claim to be experts. We don't act like gurus. And so, I mean, we're here to make money. Like, we don't hide that. Like, anybody on YouTube for 4 hours a day is doing it to make money. They can pretend they're not. I would rather trust somebody that's real about it and that's honest about it. I will tell you straight up, I am certainly here to make money, and that should be an understandable thing. If you watch the radio, if you listen to the radio, if you listen to the radio, they're going to do a commercial about every 30 minutes. And so we do one on average about every hour here, which I think is very reasonable. And again, we certainly admit that we're biased in their favor because they pay us money. They're sponsors of mine. But it should be an understandable thing. I mean, I'm here to make money. You guys are here to learn. I'm providing value and a service. And, again, you can't get mad at people for making money on the internet. That's what they do. The only people that really get mad are people who are struggling themselves, I watch the radio. Definitely top 3 radio watchers in the world. Nice. So we're getting a little pop up here. Again, the dollar index and the NASDAQ almost trending with each other. The real question is, will the radio be obsolete in 10 years? I think so. Will they even have a radio in 10 years? Market opens up in 6 minutes, guys. 6 minutes. I see somebody on Twitter. I'm not laughing at them. But they said, quote, I blew a 7-figure account, folks. It is what it is. Putting it out there so I can get rid of the energy and move on. Short bias traders on large caps are all in the same boat. Well, guys. I mean, y'all might hear me rant about this a lot, but like, okay, this is why. A year ago, when the S&P, like, look, I'll put this up. A year ago when the S&P looked like this, right? Here's the SPY on the top chart. A year ago when the S&P was down here, and basically everybody was screaming the market was going to crash here a year ago. I was sitting here telling you the same thing, was that my bias on the market long term is on the upside. Like, I think the market's going to go up. I told people that over and over again. Bro, I never got made fun of more than for telling people I was bullish and I thought the market would bounce. They told me I didn't know what I was talking about, that the market had to drop, that the market was going to drop, that I didn't know what I was talking about. Imagine being long, they told me. You know, like all these things. They made fun of me. They called me a perma-bull. They just said all this different stuff, right? Now, a year later, we have ripped up huge percentages. And in hindsight, I was right. And a lot of the people that are shorting the market long term and are arguing with me about why shorting the market long term is somehow a viable strategy, not this person. I don't even know who this person is. But the point remains. Don't short blue chip stocks long term. It's a sucker's bet. You might make money on it. The likelihood that you do is what makes it a sucker's bet. Not whether the individual results are positive, but the odds in that trade are super low. Super low. You might be able to find a blue chip that you think is extended. Capitalizing on is a different story. And the downside risk, if you're wrong, is so high. Just be smart, guys. Understand the true edge and nature of the market. Yeah, somebody told me, I can't remember who it was, but somebody told me that the SPY was going to drop 80%. 80%. I did the math here, and this was when the SPY was at, like 350. So I did the math and I was like, 80%. You think the SPY is going to be at $70, sir? Maybe, but bears, bro. Listen, I'm not against you, bears. I short term, but you also can't get so wrapped up in politics and in the news is really what it is. Like the banks, right? The banks a year ago were telling everybody the market was going to crash, like it was some terrible market that you better sell now, and it scared a lot of people, and they ended up selling, and then the market ripped up 20% almost. Who you think made money on the upside? The banks did. Who you think lost money by not taking positions? Retail traders did. And so I don't like to be manipulated. I just stick with what I think the long edge is. And maybe I'm wrong. Yeah, I think my bias shows I'm obviously bullish, but anytime somebody tells me the market's about to crash, I immediately kind of squint my eyes at them and look at them in judgment, And maybe I'm wrong too. Hey, maybe the market crashes tomorrow. I think a lot of the time the market's contrarian though. So if everybody thinks the market's going to crash, I'm usually pretty skeptical. Where's Nvidia at right now? Speaking of Nvidia's still up there though. This time could perhaps be different. That's always what they say, though. They say, no, this time's different, you know. Again, I'll tell you this, though. If the SPY goes to $80, $70, we got a lot bigger problems than your investment losses, most likely, you know. Like the macroeconomic landscape would be chaotic if that happened. You know, same argument for the people who say don't buy bonds. What if the U.S. government fails? If the U.S. government fails, bro, you got a lot bigger problems than your bond payments not paying out, you know? Where do you guys think we close today? Flat, higher, green, slightly red. Yeah, I mean, again, the CPI data came out slightly negative. Here's the opening bell, team. Ding, ding, ding. There's the opening bell, guys. Let's see what we get. Again, I think we also could have a chance of a choppy market, considering tomorrow we have PPI and the FOMC rate hike decision, and then Thursday we've got jobless claims and retail sales, and then Friday is quad witching day. And so we got a lot of big economic stuff going on. And typically ahead of these reports, it's sideways, but I think we did get the biggest one today, so maybe not. Portfolio is completely red. Oh, I'm sorry to hear that. I mean, my portfolio is red today as well, but I mean, that's pretty normal. We're not going to always have green days. All right, look at Nvidia up here. We probably look at Tesla too. Tesla dumping down to 236 this year, guys. So Tesla falling a little bit. Nvidia on the right side at 462s. Look at Tesla dump here. And Nvidia's pushing up though. What's Apple doing? All right, so we're short. All right, we cut that. I think we lost a little bit actually there. Should have stayed in it. Tesla down to 235s. Tesla bouncing up, Nvidia bouncing up a little bit here. Apple's still looking kind of weak though, so part of me wants to short. Short, I guess, a little bit more. So we just made a little bit more in our account here on the regular S&P 500. We are now up about $1,100. Nvidia still ripping up, mostly short. See if we catch anything else here. Big breakdown here, short on the downside. Watching Lucid look weak. Apple looking weak too. So we're starting to get a little pop up. Watch Nvidia hit that 200 EMA and that VWAP level though. Part of me wants to short this again, so we're short. All right, so we just made a little bit more, locked in some more. We are now up about 1150 on the day or so. Yeah, sorry. All right, so Bitcoin under 42K. All right, so bearish action for sure right now, weak action heading into tomorrow. It's a really interesting dynamic of markets. I have people saying Jerome Powell's celebrating somewhere. All right, so again, Tesla looking really weak. Nvidia actually popping up though. Nvidia trying to go green on the day when most of the market is red. Also, guys, what are my other sponsors? Let's take a look at the NASDAQ here. You know, I've never tried 3-minute candlesticks on Chart Prime. But again, you want to see one of my favorite ways to use these tools. Like, check out the Market Oracle on Chart Prime. So this is the Market Oracle. So it's a trading view indicator service. You can use it in stocks, crypto, forex, futures. These are 5-minute charts, right? You can set them on any time frame. Look at the sell signal, dip. Look at the strong buy signal, really big pop. Look at the sell signal literally here at the top, nice little dip. All right, so again, that's 3 for 3 today on the regular Market Oracle Pro. Again, you can backtest this yourself and see, look, strong buy signal bounce. This one maybe was wrong. This one worked. This one worked. And so again, genuinely pretty useful in my opinion. You can try them on any time frame. You can look at a 1 minute time frame as well and see if they work on that. I haven't really looked at it on 1 minute. Yeah, so look at this sell signal right here at the top. So it judged this red action and actually called it correctly. Look at that beautiful breakdown. Buy signal here worked. Buy signal, strong buy signal there worked. This sell signal probably didn't work. So they're 3 for 4 today on a 1 minute chart as well. The other cool one that I was looking at was an hourly chart. So again, you can use these on any time frame, and this is just a small piece. This is one indicator that Chart Prime offers. It's custom trading view indicators. Again, you can use them in stocks, crypto, forex, futures. Yeah, so look, here's the 1 hour time frame. Look at the buy signal there, bounce, strong sell signal there, dip, strong buy signal there, bounce, sell signal, dip, buy signal, bounce. And so look at these. All of these worked on an hourly time frame as well. And again, I can't guarantee you're going to make money. Nobody can. I can't guarantee profits, nothing like that. They're a sponsor of mine as well. I'm super biased in their favor, but this is just a small piece. They also have reversal indicators with the regular Market Oracle. They have screeners. I could put up smart money concepts. I could put up chart patterns and see like flags and wedges and all these different things. And this is an hourly time frame. Yeah, look at the flag and wedge, and then look at the actual break of that flag and wedge, and look at the follow through here. But again, there's just so much stuff that they can use in any symbol, any security. It's like $50 a month. Again, I was always against companies that did these type of indicators until they actually showed me theirs. Genuinely useful. If you want to check it out, there's the link. I can't guarantee you're going to make money or anything like that. They're a sponsor of mine as well, of course. Yeah, I'll have to check out the 3-month time frame. But if you want to check them out, there's the link. Market's kind of flat right now, so we're doing another plug. That's like our 4th plug today in like 4 hours, though. So, I mean, Amazon is up. If you want to check out the link for Chart Prime, we'll put this up here also. All right, hold on. You want to come on stream or no? All right. My wife Carol's here. All right, hold on, guys. Here, check out Chart Prime. There's the link right there. I'll be right back. All right, sorry guys, Carol's talking to me. But yeah, so pretty flat right now on the Nasdaq. I'm watching Tesla a lot. I'm watching Nvidia. Nvidia's all the way back up to 470s. So we're watching markets right now. No, she's not. She's not mad at me. We're talking about our plans for the day. So yeah, we're just talking about our plans for the day and our plans for the holidays. All right, so Nasdaq flat, breaking down again. Breaking down again. Apple just cracked lows. Yeah, CPI might be right below me on screen. It might be right below me. Could be. Might not be. Yeah, so we're kind of we're I'm gonna add a little bit to some of these positions here. Man, oil struggling. Question is, do I want to add to Exxon a little bit? Maybe. Still got a ways to go, but that's all right. Apple a little weak. Yeah, Apple's kind of weak. Where's Meta at? Is Meta ripping up? Airbnb reversal. Yeah, I mean, they're all kind of flat right now. Meta's starting to rip up. That might drag tech up with us. I stopped trading as much. Again, here's my portfolio right now in futures. So we're doing all right. Nvidia 471. CPI was neutral except for month-to-month data here, so it was pretty flat actually. Yeah. Sorry, I'm adding to some of these positions here that I'm in. And again, if they're wrong short term, I'll just sit on them long term. Yeah, Fed's gonna pause tomorrow, almost certainly. All right, so we are getting a bounce up, mostly partly helped by Meta. Meta is rising to 327s. Tesla trying to find a bottom at 235s. All right, so Elizabeth Warren did a bill to crack down on Bitcoin in the crypto industry by pushing KYC measures on wallets, miners, and nodes. All right, Nasdaq's starting to bounce back up a little bit. We've had mostly bearish. I'm going to go ahead and take one more trade, and if we're wrong in this trade, I'll probably close it down. But we're going to short, continue the downward trend that we've been in, see if we can make some money on it. If not, we'll get out up very big on the day. We're down slightly here. I'd love to flush down. Again, I think a lot of people see the bearish trend though, and I think we also could get some shorts getting squeezed out of this. And there's a breakdown. There we go. Up a little bit. Like a little bit more than this though, so I think I'll let it chill. Watch Tesla, Nvidia here. New candle opens up in about 20 seconds. We'll see what that candle looks like. Nvidia is really driving the market up though. Watch Nvidia testing the highs. I'm going to probably cut this. I don't like that at all. So we lost 75 bucks. Again, I don't like this push up in Tesla and Nvidia as well. I think it's too strong for this. And I could just be getting out prematurely. But yeah, I have no idea about that best vibe. I have no idea, bro. I don't know what symbol that is or anything. There's a minimum time. There's no maximum, Steve. Looks like getting out of there was the right move. Sounds like a Greek wedding. And again, you can try Top Step with me. Again, if you want to, most day traders lose. Again, when I first started, I used a platform called SureTrader, lost $4,000. I had $4,000 saved up to me. And my wife was like, hey, bro, you shouldn't do it. And I was like, oh, no, man, I've been watching YouTube videos about penny stock day trading, guys. Like, I'm going to take this $4,000 and I'm going to have financial freedom, guys. Ended up losing that 4K in about 3 weeks, bro. I almost wanted to cry when I lost the last bit of it. I was just disheartened. Again, if my wife wasn't around, I might have cried, you know. She told me not to do it too. But the reality of it is most day traders lose. Almost all day traders lose, right? That's not really a controversial thing. Limit your risk. You don't have to trade crazy. You could trade small. Limit your risk in a funded account program like Top Step. They give you a demo. If you can perform on the demo, then they fund you with real money. If you lose, it's not the end of the world. You just lose what you paid for it. If you're good enough to pass it, you get a 90% split once funded. They pay out millions in actual withdrawals every year, fund thousands a year. If you want to check it out, link is in the description. I appreciate the love, guys. Thanks so much. Check them out. I appreciate the love, support. Again, link is in the description. Check out Chart Prime. Appreciate the love. Again, they're just sponsors of mine. I'm certainly biased in their favor because they pay me money. We will be back tomorrow, bright and early here tomorrow. Guys, tomorrow we have the other side of the inflation coin titled PPI, the producer price index, drops at 8:30 tomorrow morning. We will stream it live. We get thousands of people here for these reports because we cover it quickly. So again, you can follow somebody else that reports it late, or you can follow me who reports it quickly. Subscribe, hit the notification bell. I appreciate the love. Thanks so much. Also, guys, tomorrow we also have the FOMC decision, which we will be streaming fully live. Right now, guys, we got about 700 people here. We need 60 subscribers to hit 121,000. Just 60 little baby subscribers here, guys. Do it now. Try it now. But again, we are going to stream the FOMC meeting in its entirety, the full rate hike decision as soon as it's announced. The FOMC meeting, we're going to break down what they're saying, what they're meaning, all that good stuff. You'll be able to watch it completely live right here on this stream. So hit the subscribe button, team. You know you want to. Try it one time. It might feel good. I'm not going to sit around until we get that 60 subscribers, but I should. And again, y'all hit that subscribe button. Have a great day. I'll see you guys later. Good luck. I'll be back tomorrow morning. We got a lot of stuff happening tomorrow. Tomorrow's probably the biggest day in markets. More so big than today. Tomorrow we're going to have PPI and the FOMC decision. We're going to have 50,000 people plus here watching, tomorrow. So again, we'll have 50,000 views plus tomorrow throughout the day. And so again, stick around. Hit the subscribe button. Hit the like button. I appreciate the love. Thanks so much. I'll see you guys later. Y'all be safe today, guys. Bearish market. We might have choppiness ahead of these reports as well. So y'all be smart. Be safe. I'll see you guys later.